ఆఫీసర్ అని చెప్పి అడగండి. సిఏ ఆఫీసర్ అడగండి, వచ్చేసేయండి లోపలికి.
జస్ట్ a minute, please. ఒక్క నిమిషం.
Sir, please go ahead, sir.
Yeah. Good evening, everyone. My dear members, students, and participants. I welcome you all on this evening on the second day of our Hi-Fi. That is a series of programs on tax audit. Yesterday we are done with ICDS. Today we'll be dealing with changes in the tax audit report. It will be dealt by none other than our South India most famous CA K. Gururaj Acharya, who is a faculty member for many students. He has trained very many number of students. He is with us. He has already joined with us. We also have our chairman of Vijayawada branch, CA Godavati Srinivasarao, with us. I request our chairman to give his opening remarks.
Good evening, sir. Respected resource person of the day, Gururaj Acharya, sir, and my dear members, ladies and gentlemen, my dear students also. A very good evening for one and all. As I already told you that tax audit being the bread and butter of this area, wherein we are live with the only with the help of tax audit fees and other things. That is my full convention, because 90% of the audits that what we are doing in Vijayawada and in and around places of the Vijayawada, mostly in South India, because of be related to the tax audits, because the corporate cult is not yet developed in our type of areas. So we mainly having the tax audits only. So day in day out, we are having so many changes in the tax audit provisions also. So to recapitulate the same, we have conducted a series of seminars on the occasion of Silver Jubilee, Golden Jubilee of the Vijayawada branch on 18th August, only on the tax audit, this thing by Murali Krishna Garu and some other eminent faculty. So as a matter of revision of the same, we would like to conduct another series of programs with complete structured program like that, because we have already completed our that BCM's video virtual CPE meets. That's why we have planned it on the taking the help of the BOS operations for the student activity. So Sir Gururaj Acharya, sir, most of the members are also there, sir. More than 50 to 60% members are there, and also students are also participating in this webinar. So I request you to take confidence of the same, and without wasting much of our time, I request Ravi Kishore sir to introduce today's resource person, Gururaj Acharya sir, to you all. Thank you, and over to you, sir.
Thank you, sir. Thank you for the opportunity. CAK Gururaj Acharya hails from the temple town of Udupi. He is brought up in Iron City, Bellary, and he is now well settled in the knowledge city of Bangalore. He is a qualified chartered accountant and he is currently practicing at Bangalore. He specializes in corporate finance, corporate taxes, and company law. He is also a cost accountant. He is a first ranker at the university level of BCom, and he is a 10th ranker in CA final and 21st ranker in CA Inter, and he is a first ranker in CWA Inter and third ranker in the final of CWA. A ranker. It should be a motivational session also for many of the students who are attending this seminar on this day. He is a member of Bangalore Financial Reporting Review Group, formulated under Financial Reporting Review Board of ICA New Delhi, and he was a director on the board of directors of State Bank of Mysore. He was a member of Karnataka State Level Audit Advisory Board, and he was also a co-opted member of Expert Advisory Committee and Committee on Accounting Standards for Local Bodies by ICA New Delhi. He has also authored a book titled Internal Financial Control, Practical Handbook on Audit Report on What Can Go Wrong, and it was published by Karnataka State Chartered Accountants Association. He is a resource person on accounting standards, standards on auditing, company law, LLP matters, corporate finance, financial analysis, corporate tax, and tax audit. I present before you CAK Gurraj Acharya. It's over to you, sir.
Thank you, Ravi Kishore Garu. Thank you, Srinivas Garu, for bringing me on to virtually to Vijayawada. This is the best part of Corona, I would say. The best part of Corona is for a 3-hour session. I need to invest only 3 hours for the program by being there, not spending time in travel and stay. But the worst part about Corona is I will not be able to get the blessings or darshan of Kanakadurga Mata, but I'm sure with all your blessings, it's as good as the blessings of Kanakadurga, whom you are very close to. So, Endaro Mahanubhavulu, Andariku na Vandanalu. So, I really bow before all the learned members of the profession in Vijayawada, and I also send my best wishes from Bangalore to all the students who are listening to this session on changes in tax audit and issues thereof. So this session will be for a period of 180 minutes. Looks very long, but let me tell you, as and when we progress, it will look very small. At the end, there will be a lot to cover than what we have already covered. Having said that, tax audit has been there since 1984. Nothing new. We have been doing tax audit for the last 36 years. And those of you who have joined the profession last year, in fact, you would have gone through your articles and your examinations. Therefore, you are better off than senior chartered accountants like us because your knowledge in the subject will be stronger than our knowledge in the subject. Having said that, what am I therefore concentrating on today is what are all the changes which have happened from last year to now. In fact, 2019, when we completed our tax audit, to now, a lot of changes have happened, which will be affecting our work on tax audit. No, fortunately, Form 3CA, 3CB, 3CD has not changed. Now, there has been some minor amendments which happened on 1st of October with respect to the Form 3CD, which is relevant for what Mr. Srinivas Rao was talking about. That around Vijayawada, you don't have many company audits. So therefore, the changes which have happened in Form 3CD is mostly for companies, or rather only for those who are doing the company audits. Nevertheless, although you don't have, maybe majority of you don't have company audits as told by Srinivas Rao, I will still cover the changes as relevant to the companies because even if you have 1 or 2 companies audit, you will have to comply with those changes when you come for the tax audit with respect to those companies. So Form 3CA, 3CB has not changed. Form 3CD has got changed from 1st of October 2020. There are certain insertions in the Form 3CD by virtue of which we will have to make certain additional disclosures only with respect to companies which are opting for the new changes which have taken, the new sections which have been introduced for companies, namely section 115 BAA and 115 BAB. What it is, I will take a bit later on. Now, tax audit, the moment when we say tax audit, it is comprising of 2 words, taxation and audit. Now, there is an audit aspect of taxation and a tax aspect of audit. No? So whereas today I will not be talking about the audit aspects. I mean, I'm told that tomorrow or so, Shri Priya Madam will be talking about the audit planning, the audit documentation, the accounting standards, the various standards on auditing that one has to really comply with when you do the tax audit. Whereas today I will be concentrating only on the tax aspects. We will be covering through various sections of the tax audit. Very interestingly, if I ask you, this session will be something very interactive. I will not be talking all the while. I want interactions. I want questions to be posed by all the viewers. If you have any questions, please post the questions in the Q&A box. I have requested the chairman Srinivas Rao and Mr. Ravi Kishore to ask the questions as and when you pose the questions, so that I will be covering that particular module then and there itself instead of taking it till the end. If I may ask, how many sections are referred in the tax audit report in Form 3CD? How many sections of income tax are referred to? It will be very surprising. There are about 89 sections, 89 sections which are referred in the Income Tax Act. I mean, in the 89 sections of the Income Tax Act have been referred to in Form 3CD, and one section, very interestingly, that is section 23 of the MSMEDA Act, which is referred. So totally we have about 90 sections which are referred. So today we will not be covering all those 90 sections, but a majority of the most important sections is what we will be covering in our session. So what are all the changes which have happened since last year? I know I was there in Vijayawada last year when Madam Nagavalli was the chairman. Around last November, September, October, I was there in Vijayawada, and I took up various aspects of tax audit at that point in time. I remember taking up issues in tax audit, but today I will not be getting into the issues or presumptive aspects in that detail. But what I will be concentrating on is the various changes which have happened since last year till now. Now, for a moment, let me give you a bird's eye view what the changes are before I get into my presentation proper. I mean, I have a PowerPoint presentation which I will be putting up on the screen for all of you to see. But before I get into the presentation proper, let me tell you, normally the changes which happen in taxation in a big way will be through the Finance Act, through the budget. So last year also we had a budget 2019. Now the budget of last year will have a bearing now. Whatever budget 2020 happened will be for the finance year 2021, but the audit which we are doing out now, tax audit which we are carrying out, is for the financial year 1920, assessment year 2021, for which the most important change happens by virtue of budget 2019 or the Finance Act 2019, which was passed, which was presented to the Parliament by the then Finance Minister Piyush Goyal. Our own Chartered Accountant member Piyush Goyal presented the budget on 1st February 2019. So that is some of the changes for tax audit has come from there. Number two is last year being an election year. The budget which was presented by Piyush Goyal had a life of only 5 or 4 months. What he actually presented was actually a vote on account, and immediately after the elections, there was another regular budget which was presented by the present government, led by the current Finance Minister Nirmala Sitharaman. So on 5th of July 2019, there was another change which came in in the taxation by virtue of Finance Act number 2, 2019. Finance Act, so we have two Finance Act number 1, 2019, coming by virtue of February 1st, 2019's budget, and second budget passed on 5th of July. That changes came inside the Income Tax Act, calling as Finance Act number 2, 2019. Then somewhere in the month of August, the Finance Minister, to pep up the economy, came out with a lot of goodies for the corporate sector. For the companies, the rate of taxation, which was projected at 30% and 25%. I mean, the rate of income tax for companies was 30% and 25%, depending on the turnovers of the company. If the turnover of the company was more than 400 crores, now we are talking about financial year 1920, the turnover, if it is more than 400 crores, not in the previous year, that is 18-19, but in 1 year before the previous year, that is in financial year 17-18. So the tax rate applicable for 1920 will not be 1 year before, but 2 years before, that is finance year 17-18. If the turnover of the company was more than 400 crores, then the rate of taxation for such a company was 30%. Otherwise, if it were to be less than 400 crores, the rate of income tax for such companies was pegged at 25% plus surcharge plus cess. Now, surcharge was depending on the levels of total income, whereas the tax rate itself was based on the turnovers. And cess was fixed at 4% for all types of companies. In the month of August, Nirmala Sitharaman came out with a very good news for all the corporates. She said that all these companies can continue at 30% and 25% and take all the benefits of exemptions and deductions as told in the Income Tax Act. If the companies give up some exemptions and deductions, then instead of paying 30% and 25%, I will slash down the rate to 22% plus surcharge plus cess, under section 115 BAA. And she also said if it is a newly established manufacturing company, they introduced another section called 115 BAB. A newly established manufacturing company will be taxed at the rate of 15%, as low as 15%. So where is 30% and where is 15%? So it is as good as slashing the tax rates from 100% to 50%. That means from 30% to 15%. So the tax rates were reduced for a manufacturing company to as low as 15% plus surcharge plus cess. So they introduced two interesting sections, 115 BAA and 115 BAB. So 115 BAA is for all existing companies who are prepared to give up certain exemptions and deductions. We will see what these exemptions and deductions are. Primarily, the exemptions and deductions are additional depreciation. If you give up additional depreciation of that 20% which is available to a manufacturing concern, you'll have to, once you come into the lower rate of tax, you'll have to give up the additional depreciation of additional 20% depreciation. You shall also give up all those deductions under Chapter 6A, Part C. Now, if you look into Chapter 6A, it is divided into 5 parts, Part A, B, C, D, and DA. Now, Part A is a general, it talks about filing of income tax returns, etc. Part B deals with the ATC to all our deduction or investment-based deductions, such as our LIC or donations, etc. They are all dealt with in Part B. Part C is income-based deductions. So what are the income-based deductions? Section 80H to 80TT. 80H to 80TT is Part C. So what they said is, if you want to go in for lower rate of deduction, lower rate of taxation from 30 and 25% to 22% or 15%, you shall give up Part C of Chapter 6A, that is income-based deductions, which primarily includes 80IA, 80IAB, things like that. And one of the things which is also dealt with is 80JJAA. 80JJAA is a very interesting deduction, which is kept as an exception to this rule of not in Part C. In Part C, you cannot, if you opt for 115 BAB or 115 BAA, you will not be able to get any deduction under Part C except 80JJAA. So what is 80JJAA? Let me just briefly tell you. 80JJAA is a deduction which every entity which is subject to tax audit, can claim additional 30% deduction towards the expenditure incurred for employing new employees. So in this year, if I employed 10 new employees and the cost of those 10 employees for the whole year comes to about 10 lakhs, I will be able to debit 10 lakhs and claim it as a deduction under Section 37. Apart from that, 30% of 10 lakhs, that is 3 lakh rupees, I will be able to claim it as a deduction this year and the next 2 years. So 80JJAA is a beautiful section which helps the companies to claim additional deduction if they employ new employees. So this is a deduction which is given to boost the employment in the economy. So what the government has done is, we will give you additional incentive if you are able to employ new employees. But let me just tell you the conditions for claiming 80JJAA. The conditions for claiming 80JJAA are, you should be able to employ net new employees in the year. That means if I have added 10 employees, 7 of them have left, only 3 employees are considered to be net new employees. So I will not be able to claim the deductions for 10 employees. Rather, I will be able to claim deductions only for 3 employees because 10 joined, 7 left. Let us say 10 joined and 12 left. Then I will not be able to claim anything under section 80JJAA. So that's a point to be noted. The second point to be noted is the employees who are considered as new employees, there are certain conditions. Such employees should all be drawing less than 25,000 rupees per month. So if they are drawing more than 25,000 rupees per month, they will not be considered as eligible for 80JJAA. Although they will be new employees, they will not be considered for 80JJAA. So they should be employees drawing less than 25,000 rupees salary per month. Number 2, they should all be covered under Provident Fund scheme. They should all be covered under Provident Fund scheme. Number 3, the payments of salary to such employees should be in permitted modes. Now, for the moment, I'm introducing a new terminology in income tax called permitted modes. What is permitted modes? There are 3 plus 8 permitted modes. I mean, I will put up what those 3, all of us are very clear: account paid check, account paid draft, and electronic clearing system of the bank. Electronic clearing system of the bank. And those sections, there are certain sections which have used any of these 3 modes or any other prescribed manner, any other modes of prescribed manner. And in the prescription, they have given 8 other modes. So 3 plus 8 modes. I will put up the slide to show what are those 8 modes. But for the moment, we can take it as 3 plus 8, about 11 permitted modes. So these employees, if they are paid in cash, it is not considered as payment at all. So like that, they have given 3 plus 8 modes, around 11 modes of payment. So the payments to such new employees should be made in the permitted modes. Point number 3. Point number 4 is it is available to every business entity, not to a professional entity. It is not available to a professional office like yours and mine, but it is available only to a business entity which is subject to tax audit. So if the business entity is subject to tax audit, then they are eligible to claim 80JJAA. If they are not subject to tax audit, then they are not eligible to claim 80JJAA. So, and then there is a final requirement that a chartered accountant should give a certificate saying that all the above conditions have been complied with. Then he will be able to, that such a business establishment will be able to claim 30% of the salaries which are paid to new employees as deductions. So although this 80JJAA comes in Part C of Chapter 6A, a company which is opting for 115 BAA and BAB can still claim the benefit of 80JJAA. That's the point I wanted to say. So what are the other things that a company which opts for 115 BAA, BAB will not be able to get? That one is additional depreciation. One is Part C of Chapter 6A. Then they have told Section 35 deductions, Section 35 AD deductions. So like that, I will list out what are the benefits that they have to forego. So these benefits they have to forego. And they have got, apart from the lower rate of income tax, they have one very good attraction, which is the company need not pay minimum alternative tax. The company will not be liable to 115 JA. So 115 JA will not be applicable to such an entity. So whatever MAT we are paying at the rate of 18%, 15%, whatever I will put up. So that will also not be, the company which is opting for 115 BAA, BAB need not pay MAT. So that is so 2 great advantages for a company which is opting for lower rate of taxation and 115 BAA, BAB will be reduced rate of income tax. Number 2, not to pay MAT. What are the disadvantages? One is no additional depreciation, no Part C deduction under Chapter 6A except 80JJAA. Certain sections like Section 35 AD, Section 35 accelerated and weighted average deduction for R&D expenditures, they will not be able to get it. And one of the 2 other greatest disadvantages, any MAT credit available or loss on account of the above deductions, exemptions which they are not entitled to claim in future will also not be available to such a company. However, on 1st of October 2020, they went on to say any additional depreciation which is available as brought forward brought forward additional depreciation in the case of such a company, you are entitled to add it back to your gross block rather than give up the additional depreciation altogether. So additional depreciation will be added to your opening WDV, and you can claim your depreciation in future instead of claiming that additional brought forward additional depreciation. So that is about 115 BAA. What is BAB? BAB is for newly established companies which has been incorporated after 1st of October 2019 and starting up of their commercial production before 2023. April 2023, they should be able to start their commercial production. And for such companies, they have put some other restrictions. They should not be formed by splitting up or reconstruction of an existing company. In that context, they also have to give up exemptions and deductions. The rate of income tax will be, instead of 30% and 25%, it will be 15%. So we have two new rates, 22% and 15%, with a surcharge, a fixed surcharge of 10%. You will see that the fixed surcharge of 10% and a fixed cess of 4%. So we'll see that when we put up the screen. So this came in by virtue of a tax ordinance or a tax amendment act 2019, which we will see. So that is the third thing. Then the fourth change. So first change was from Finance Act number 1 2019. Second change was Finance Act number 2 2019. Third one was tax amendment ordinance, which subsequently became an act in 2019, introducing 115 BAA and BAB. The fourth change for the tax audit season, which came in, was by virtue of Finance Act number 2020. Finance Act number 2020, they introduced two important sections which had a retrospective effect. So two important changes were, they increased the threshold limit for tax audit for certain business entities, not for profession, from 1 crore to 5 crores. A business entity need not do tax audit if its turnover is up to 5 crores, provided the cash receipts and cash payments in such a business entity is less than 5%. So we will see that in detail as we progress. So this is a very important change. They increase the threshold limit for doing tax audit in case of certain business enterprises. It could be a company also. It could be a partnership firm, LLP. Up to 5 crores tax audit is not required if you are doing a business entity, if it is a business, not in the case of a profession, provided your cash receipts and cash payments are less than 5% of the total cash receipts and total cash payments. So this is one very important change which happened by virtue of Finance Act 2020, applicable for financial year 1920 audit itself. The second change which they brought in was section 271 AD, which I will deal with in detail as I put up my presentation. So the fourth change was through the Finance Act 2020. And the fifth change is because of COVID, lot of changes happened with respect to timing, be it filing of income tax return or for claiming deductions under Chapter 6A. What was originally, I mean, you could claim deduction under section 80G or 80C and all these things, provided you did your investment before in the financial year, that is from 1st of April to 31st of March 2020. But because of the lockdown around the closing year end, the investment period for financial year 1920 for claiming benefit under section Part B of Chapter 6A has got extended till 31st July 2020. So like this, some changes came in, and which will be relevant for us when we do the tax audit and we do the 3CD reporting. Even the changes which came out subsequently by virtue of Tax Amendment Ordinance 2020, Tax Amendment Ordinance, which finally became a Tax Amendment Act 2020, also has to be reckoned when you're doing the tax audit for financial year 1920. So we will be covering all these 5 changes. I will be putting up my slides. So as and when you have any questions, you may please post. Now, Ravi Kishore Garu, I will stop here and ask you, are there any questions and is the going good? Now I'll put up my presentation.
Yes, sir. Everything is going good. And we had a very nice overview of all those amendments which have been applicable for the current session of current tax audit season. We have one question from Amitabh Kocher.
Yeah.
Sir, if SSC has done tax audit under 44 AD earlier,
Yeah.
is he have to do tax audit for the next 5 years, even if turnover is less than 1 crore and profit is more than 8%?
Yeah. Yes, sir. The answer is yes. The answer is yes. Unfortunately, the answer is yes. I will talk about that in detail through my presentation. The answer is yes. The justifications and the provisions, etc., I will deal as and when I go forward. So, shall we proceed further, sir?
Yes, sir.
So this is a wonderful, when I have put up my presentation, I suppose that is visible. Tax audit for 5 days. So that's how they said high five. So high five. And so I am also putting a high five to all of you. I wish the program a very great success. Very good program designed by Vijayawada branch, starting with the tax audit planning, documentation, accounting standards. I will tell you, documentation is the only thing which comes in as a rescue for the chartered accountants in case a notice comes to the chartered accountant. Now, I always keep telling that the problems what we discuss in a session like this or when chartered accountants meet is general problems. But when a notice comes to a chartered accountant from a regulator, it will be that chartered accountant only who has to deal with that particular notice. So none of us will be able to help you reports only after you have sufficiently convinced yourself, because the future is not going to be like the past. The future is not going to be like the past. So I will tell you why. Therefore, that is a very good session. And today I'm talking about changes in tax audit, clause by clause analysis on Form 3CD. Of course, this is what is required by people who actually do the work. They how to fill up. I mean, when to say yes, when to say no, when to say not applicable. I mean, when you say, let us say the questions in 269SS and 269T has got reversed as compared to 3 years ago. Now there, if you continue with your yes, then the answer will actually be not compliant. So you'll have to be very careful how you say yes, no, and not applicable. And a session on ICDS is very apt because ICDS is now the overriding standard for income tax. And use of tools in tax audit, I am told Mr. Ravi Koshar and Sharan are going to talk about it. So wonderfully designed program for 5 days. So my topic, as I told you, is changes in tax audit provisions and issues thereof. Now, I told you that past is not going to be, the future is not going to be like it was in the past. The changes in tax audit is what is my topic. But let me tell you, changes in income tax overall. Changes in income tax overall. The income tax, entire structure of income tax has got changed with the introduction of faceless assessment. All these days, it was sufficient if I know the Income Tax Act, okay. But if I know the officer very well, I think my job was done. The future is not like that. Any amount of friendship with the assessing officer, any amount of knowing the income tax officer will not come to my rescue. The only thing which comes to my rescue is knowing the law. So you will see my final slide which says, knowing the law helps, knowing the officer will not. Now, as far as I as a chartered accountant is concerned, knowing the law helps. But as far as my client is concerned, I will say complying with the law helps. So knowing the officer will not help, knowing the law helps. Knowing the law will not help, complying with the law helps. So we have to ensure as chartered accountants that our clients comply with the right side of law. And in case they have not complied, it becomes our duty to report the non-compliances in our tax audit report. Now, only then will the chartered accountant be safe, and probably the client also will be safe, because if I report, he may have to anyway pay taxes, but then he will be saved from enormous amount of penalties thereafter. So why I've taken up this particular slide is this: the future is going to be faceless assessment. So faceless assessment is not a personal assessment. It is going to be a professional assessment. So when the question comes itself, you know that the additions are sure if your preparations were not okay. So if they come to know of the issue, then you are definitely sure that it will be added. So therefore, please warn all your clients that the future will not be like the past. So that is a very important change which we ought to communicate, which we need to know for ourselves, for sure, and I'm sure all of us know. And for us to communicate this to the clients. Srinivasarao garu, I'm sure your clients and my clients were used to keep telling me, ఏమన్నా ఎక్కువ తక్కువ అయితే మీరు ఉండరు కదా సార్ చూసుకునే దానికి అని.
Exactly, sir. Because
మీరుండరు కదా సార్ చూసేదానికి అని.
అవును sir. Because now that we do not speak, sir, our books has to speak.
No, you are absolutely right. Our books and our reports have to speak. And finally, we'll have to tell to all our clients, మీరు ఉండారు కదా చూసుకునే దానికి అని చెప్తే మేము చెప్పాలా, మేము ఉంటాము, ఏమైనా అడిషన్ అయితే మీరు ఉండరు. Because let me tell you,
seriously,
earlier, let us say somebody wanted to add some 40 lakhs additions చేయాలంటే we could have told some stories to the assessing officer. లేదు సార్, వాళ్ళకి ఇప్పుడు కరోనా వచ్చింది, ఫ్యామిలీలో డెత్ అయింది, ఏమో ఒకటి పర్సనల్ గా we could have told him, and he would have probably understood and said, okay, instead of 40 lakhs I will add 5 lakhs, ask him to pay 5 lakhs, and next time let him not commit the mistake. ఇప్పుడు for them, no such feelings which I can convey. Any amount of conveyance in the document will be thrown to the waste paper basket. It will be a professional assessment. So 40 lakhs for them, 2 crores for them is 2 followed by 7 zeros. I mean, for them, it doesn't mean anything. You cannot really bring out any personal touch in the assessment. It will, therefore, I said a faceless assessment is going to be a professional assessment. In fact, I talk about the faceless assessment in a different way. What is that the client has to do because of the faceless assessment? When he has to comply. What is that the auditor has to do for the faceless assessment? Because everything is in paper. So his communication to the department only will be through his writing skills. I mean, I'm glad that Vijayawada is conducting communication classes and how to improve your communication. Maybe writing skills, drafting skills also is one very important skill which need to be honed up by the chartered accountants, because it is sometimes so easy to talk and convince. But when you give it in writing, it is very, very difficult. Sir, ఇప్పుడు తెలుగులో మీరు ఎంతనే బిడ్డ సార్ మీ పేరెంట్స్ కి? శ్రీనివాసరావు గారు, how many children are there for your parents?
Okay, 4 children andi. I am the third one.
You are the third one. మీరు ఎంతనే బిడ్డ? Third child. You are the third child for your parents. In English, you ask, you don't have an equivalent word for entane.
Yeah.
And I'm just trying to say, there are difficulties in sometimes asking, communicating in writing.
Language also. Language.
You have a big lacuna, and the volumes that we are dealing with, when it is coming to actual giving it in the before the officer, very difficult to convince. And today, I will tell you, the officers of the department are very professional. Yesterday, I got the standard operating procedure as to how they are going to do the faceless assessment. They have come out with some 44 pages of standard operating procedure, how they are going to do it. But then we have to deal with individually. I mean, although the trainings that we are giving here is okay, but this is a very general training. But then when a particular notice comes to you, only I and you, or maybe my office, have to be dealing with that particular notice. Whereas for the department, it is going to be a team-based assessment. For the assessing officer, now they have the expertise. They have a team to do the assessment, unlike what we as authorized representatives, we'll have to deal it on a one-to-one basis. So, I mean, I'm just trying to tell the change in the future as compared to the past. So we have to be very, very professional in our approach. We'll have to have proper audit documentation. So before the assessing officer asks the questions, before the assessing officer in his questions, he asks, we as auditors have to ask these questions to our clients and tell them that these are the possible additions that may happen in case I don't report. And in case I don't report, when it gets noticed by the department, there will be an addition, there will be a penalty, there will be an interest. So please warn your clients about the future, which is not going to be like in the past. So let me just tell you, I'm sure all of you know, there's a National E-Assessment Center sitting out of Delhi, very close, sitting out of an office very close to Narendra Modi's house. I mean, I'm just telling that, that is the speed with which it is going. Everything is in Delhi. Then there are regional e-assessment centers, 20 regional assessment centers. That's what I said, the team-based assessment. So the nodal for all communications. Now, who is the assessing officer for a person sitting out of Vijayawada? He will definitely not, the assessing officer will not be from anywhere from your region. He will not be from Andhra Pradesh only. He may be from Delhi or Punjab or Bangalore. My Bangalore assessment will happen somewhere in Assam or Guwahati or some other place. So it will not happen in your own place. So there is no question of having an interface. So there is a wall between me and the assessing officer. Now the assessing officer will not be communicating with me directly. Every notice will go from the assessing officer to the nodal agency in Delhi. From the nodal agency only it comes to me, the questions. The answers from me will go to the nodal agency, and from there it will go to the assessing officer. So everything will be done through the nodal agency, because the nodal agency is going to be like our examination board, like our examination board in the CA Institute. Whereas in the examination answer sheets, the number will be removed and it will go to the concerned examiner sitting in different places. So like that, the examination will happen even for assessments. So what will the regional assessment office do? Regional assessment office will have got four different units. One is called the assessment unit, who is called the maker. I mean, I have named them as maker and checker. I mean, in standards on auditing, we have the concept of SA 315, risk assessment of risk when you're doing the audit. And we say that to reduce the risk, you should have segregation of duties. Segregation of duties means the maker should be different and the checker should be different. This the department has understood. They said there will be a maker and a checker, not one checker, but there will be two checkers. So there will be an assessment unit who is the actual assessing officer. And then there is a verification unit, checker one, a technical unit. In case the assessing officer wants to get some technical assistance in terms of legal accounting, valuation, transfer pricing, etc., he can approach the technical unit. And then there is a review unit, which I call it as a checker 2. So he will be concurring. Now, what is the role, each person's role? The assessing unit, which consists of the assessing officer, will ask for additional information over and above what is there in the income tax return or the 26AS or the tax audit report. He can ask for additional information, and then he can request for verification through the verification unit. Today in the standard operating procedure, I was reading that they can ask for physical verification also. The verification unit closer to your place will do inquiry, cross-examination, examine books, records, the statement. And this verification unit can be offline or it can be physical. And this report will be sent to the assessing unit, assessing officer. Then the assessing officer can request for technical assistance, which we just now saw, that is in terms of legal accounting, valuation, or transfer pricing. And then after getting all the information, the assessment unit will prepare a draft assessment order and send it to the review unit, that is a checker 2. Now this review unit, which acts as a checker 2, will concur with the draft assessment order, or based on the information available with the department, they will ask them to make additional changes. They can delete certain things or add certain things, and then the final assessment order will be sent to, to the assessment unit. Then the revised draft assessment order will be sent to the assessee through the nodal agency. So everything has to happen through the nodal agency. The communication between these four units, are also not on a one-to-one basis. It will all happen through, maybe the assessment unit maker is in Bangalore, the checker is in Gujarat, technical unit is in Delhi, and the checker unit, review unit is in some Punjab. No, and the assessee is in Vijayawada. So all these people are sitting in different buildings, not talking to each other. Every communication will go only through the nodal agency, which is the National E-Assessment Center. So these units don't talk to each other. Units don't talk to the assessee. So that much of, what should I say, secrecy is maintained. While the assessee will not know the assessing officer, I keep telling the assessing officer may know the assessee, because when he asks for give me additions for, I mean, the name of, in the income tax return, the name of the assessee is there, the contact details, etc. I mean, that to that extent, the examiner will know who the examinee is. The examinee will not know who the examiner is. That is one gap in this system. Having said that, so what is the role of the nodal agency? He serves the notice on the assessee. The notice to the assessee will come from the nodal agency. In fact, my office was telling, sir, we have a name at the end, but that name who is actually signing the notice which is sent to you, he is the one who is sending for all the people in India, or at least there will be some divisions within the Delhi nodal agency. They may have about 100 officers. Each officer, his name will be known to me, but by knowing his name, nothing can happen to me. That's the point I'm saying. So serve the notice on the assessee, and normally in that particular assessment notice, 15 days time is given. I mean, I'm sure some of you have started getting notices. We have started getting notices. 15 days time is given for our response. And today I was reading the SOP. They say subsequent notices. Subsequent notice. When I reply to this, for the subsequent notice, they may give me only 7 days, depending on the closure date to the limitation period. Then assessee may be provided adjournment for 7 days. Suppose I want additional time, sir, I'm going through season now, so I need some additional time means. So they said that 7 days or more can be given depending on the case. So that means it's not going to be months together for adjournment. It is only 7 days or around that period. So assignment of case to assessment unit on a random basis. Notice for additional information. Whatever received from the regional assessment will go through then provide show cause notice for the draft assessment order and send final assessment order with the demand and penalty notice. So these are the jobs. And finally, all functions are done electronically only. With effect from 13th August 2020, faceless assessments only, except in the case of search and transfer pricing cases. Central Circle and investigation can only meet us. Then National E-Assessment Center with the previous approval of CBDT can transfer cases to the jurisdictional assessing officers. Now, on receipt of draft assessment order, assessee or his authorized representative can seek personal hearing conducted only through video conferencing. Now, if I feel that my assessee has to be properly represented, as I told you, any amount of writing, they are not convinced. So I want to convince them orally. In that context, on a video conferencing, one can meet them. And today on the SOP, they have told the maximum period for which the maximum time of video conferencing can be 30 minutes. So within 30 minutes, I have to explain my case. So faceless appeal has also been instituted. So that also we are clear. So please be clear about this change before we do the tax audit. So this is one slide which shows that there is a wall in between every department. The second change, I talked about 5 important changes which we will be talking about, and the fifth one was what I said, or the fourth one I said. Finance Act number 2020 introduced 2 sections, amended 2 sections. One is section 44AB, increasing the tax audit limit from 1 crore to 5 crores in case of certain business entities. And the second change which happened by virtue of Finance Act number 2020 is introduction of section 271 AAD. What is this section? This says penalty of 100% of the fake invoice accounted. Now, if I have to reduce my profit was 10 crores, and I wanted to reduce my profit from 10 crores to, let us say, 6 crores. So I took a dummy invoice of 4 crores from AB Enterprises, So I have accounted 4 crores and I probably given him check and taken cash, whatever. So this 4 crores is considered as a fake invoice. So what will be the implication of taking this fake invoice? Now, all these days, whatever 4 crores was getting added and penalty on that. So now it is not like that. It is going to be 100% of penalty will be levied on 4 crores. Not only on the person who has taken this invoice and claimed it as an expenditure, but also on the company which has given me the invoice, that is AB Limited, which has given me the invoice. For them also, there is going to be 100% penalty. 4 crores invoice he has given maybe because he has got huge losses. Or maybe he is in a SEZ or some tax saving schemes he has got, or huge unabsorbed losses and depreciation he has got, and therefore he is giving it. So even by taking it into account for him, he need not pay taxes. But now, although he has paid taxes or reduced his unabsorbed losses or whatever, he will end up, because he was an abettor in the crime, he will end up paying 4 crores as penalty for issuing me a dummy invoice. So 271 AAD, I will read out: penalty for false entry, etc. in the books of account without prejudice to any other provisions of this act. That means whatever other penalties and other additions will happen is separate. That will happen separately. If during any proceedings under this act, it is found that in the books of account maintained by a person, there is a false entry or an omission of an entry which is relevant for computation of total income of such person to evade tax liability. Now, I have sold something or given a service, and I have taken money in cash and not given an invoice. In that context also, the amount of cash which are generated without giving the invoice will also be subject to 100% penalty. Assessing officer may direct that such person shall pay by way of a penalty a sum equal to aggregate amount of such false or omitted entry. Point number 2, without prejudice to the provision of subsection 1, the assessing officer may direct that any other person, so the first one was on me, the second one is on the other person, who causes the person referred to in subsection 1 in any manner to make a false entry. He is making me to make a false entry, that is, he has given me an invoice of 4 crores, or omits or causes to omit an entry. That means he has purchased goods from me and he said bills are not required. So therefore, he has enabled me not to have this credit entry. An entry referred to in that subsection shall pay by way of a penalty which is equal to aggregate amount of such false or omitted entry. So not only on me, but on the other person also. Explanation: for the purpose of this section, false entry includes a false invoice, invoice without actual supply or receipt of such goods, or invoice to or from a person who does not exist. Okay. Ravi Kishore Garu, is that going okay? Any questions? So people who have joined just now, let me tell you that if you have got any questions, I would request you to post it in the Q&A box as and when, and I will, based on the recitation of the question by the panelists, that is the Chairman Srinivas Rao or Ravi Kishore Garu, can ask the questions and I will answer it as and when. Okay. Okay. Let me now. Ravi Kishore Garu, I don't see you on the screen. Are you there?
Sir, Ravi Kishore Garu is just will join another 5 minutes to 10 minutes, sir.
Okay. Are there any questions which you want to?
Actually, as of now, no, sir, because we are dealing with mainly with the faceless assessments is going to be a hell of a thing. And as already rightly said by you, it is that we cannot represent the things, our only writing skills and speaking, only presentation skills doesn't really matters. And also mainly our books. Because day in, day out, whenever any contractor comes, he will throw the Form 26AS on our face and prepare the return or something like that. Though he doesn't have anything there, this thing, but everybody, including an employee, he has to maintain books, because if he spares something and he has given something on the interest part every year, whether he is offering the interest or something like that, so that people will know that there are something in the loans and advances part or something like that. Otherwise, it will be a very difficult part even for us to convince the authorities who are not 1 or 2 or 3. There are 5, 6, 7 officers that are involved in getting the 143.3 order now. So that is becoming a very, very hectic job, and the penalties from now onwards is going to be really shorter the mind-boggling.
As you rightly said, the entire game of taxation is going to be different.
Yes, sir.
Approach income tax with the new mindset.
Yes.
We cannot have the chalta hai attitude. We cannot say that I know the officer. All these days now,
gone are the days.
We don't know the officer. Gone are those days. So therefore, and knowing this and keeping the tension in our mind does not work.
Yes, exactly.
Go mad. We will have to tell this to our clients. That's why I said, please tell about this new scheme to all your clients. We have sent a mailer to all the clients saying this is the new version. So please keep your documentation and your compliance only helps.
Exactly.
My knowledge helps, but my contacts and your contacts will not help. That is a message that we have to draw.
Yes, sir.
That is a message which we have to draw to all the clients. And while I
already conducted a faceless assessments and faceless appeals seminars also, sir. From our branch side, we are making them vigilant about those things also. So
fantastic.
Let's continue further, sir.
Sure, sir. So next, income from domestic companies. So this is one slide which captures what is a change from the third thing I told you, Tax Amendment Ordinance or Tax Amendment Act 2019 in the month of September. Now, Taxation Law Amendment Ordinance initially, which got converted to an Act 2019, notified on 20th September 2019. Now, if you see regular companies to whom, in the right side I have put it, regular companies to whom rates are specified in the Finance Act 2019 depends on the turnover of the company. If the turnover is more than 400 crores, the rate of tax is 30%. Less than 400 crores in financial year 17-18, the turnover is less than 400 crores, the tax rate is 25%. And depending on their income, the surcharge will be 0, 7%, 12%, and cess will be 4%. So that is how the tax rate will be 26%, 27.82, 29.12, depending on the income. Or for 400 crores, it can go up from 31.2, 33.384 to 34, almost 35%. And such companies will have to pay regular MAT. They have to pay MAT. 115 JB rate of taxation for minimum alternative tax for people who are coming under the regular tax rates has been reduced from 18.5% to 15%. So that is a very important change, from 18.5% to 15%. So according to their income, they will again pay their surcharge. So it will go up from 15% to 15.6% up to 17.472%. Now this is possible for you if you want, if you feel that you want to continue with the old rates, because your final tax is going to be lower by claiming deductions and exemptions, you can continue with the old regime. You have now been given an option to move into the new regime. You can't go, you choose both the options. 115 BAA and BAB is not an option. You can either fit into 115 BAA or go into 115 BAB depending on the type. Otherwise, given an option, I would go to 115 BAB only because the rate of taxation is 15%. To get 15%, I should be a newly established company set up after 1st of October 2019, not formed by restructuring or splitting up a company already in existence. Now, there are certain additional conditions we will see, but otherwise, all the existing companies, now your pharmaceutical companies, whatever companies, your I know a lot of chili trading companies or whatever cold storage companies, which were otherwise paying taxes at 30% and 25%, can now come to 22%. Can now come to 22%. And I said for both 115 BAB and BAA, the surcharge is fixed at 10%. Fixed at 10%. And the cess is all fixed for 4% for all assessees. So the effective rate of taxes will be for 115 BAA, it will be 25.17%. And for 115 BAB companies, it will be 17.16%. And the best news is, if you choose 115 BAA or BAB, you need not come under 115 JB. That means 0% MAT. MAT will not be applicable to such companies. And what is the additional conditions? We will see. What are the additional conditions? We will see. So rate of tax, where is it told? 115 BAA and BAB in the Income Tax Act itself they have told. But for surcharge and cess, you will have to look the Finance Act. So that is the place where you look at. So what are the conditions? So for conditions, let me finish off 115 BAA. 115 BAA, because we are talking about majority of the companies which move from 30% and 25% to 22%. Majority of the companies can move from there. 115 BAB, only those companies which newly incorporate will be liable to 15% tax. So such a companies may be less in all our companies. I mean, in our office, we have one or two, a couple of them who have started afresh. For them, it is 15%. But majority, at least 30-40 companies of ours have got shifted to the new regime. So let us complete that first and then go to 115 BAB. So what is this additional condition? BAA says not eligible for certain specific exemptions and deductions. What are those specific exemptions and deductions? Anything to do with profit or investment linked deductions, such as section 10AA SEZ. I mean, if you are in an SEZ, I would prefer we don't choose this, because anyway 10 out of 15 years they don't have to pay tax at all. 35 AD, specified business. What is this section 35 AD? Now, companies which are doing some specified businesses, they have defined in section 35 AD certain specific businesses, like maybe in Vijayawada and Guntur places, I know, cold storage, people who set up cold storages, people who have set up 100-bedded hospitals and above, people who have set up 2-star hotels and above, people who have set up infrastructural facilities like toll roads or ports, airports, etc. And there are certain other 7 or 8 items which I've told, which are not very popular. So for them, under section 35 AD, the entire capital assets which they acquire in the form of building, machinery, furniture and fixtures, computers, all the capital assets, excluding land and goodwill, can be claimed as a deduction in year 1. Let us say I have spent 10 crores in acquiring this land, building, machinery, etc. And in 10 crores, 2 crores is towards land, 8 crores is towards building, plant and machinery, cold storage, etc. So this entire 8 crores, I can claim it as a deduction in year 1. Subsequently, I cannot claim any depreciation on that particular asset. So that's okay. So I will be able to get this 8 crores as a deduction in year 1. So that is about section 35 AD. But one of the interesting thing that is told in 35 AD is this 8 crores, whatever you are claiming, should all be in permitted modes. So now I told you what is permitted modes: 3 plus 8. Account pay check, account pay draft, account pay, electronic clearing system, plus 8 other permitted modes. If you have paid something in cash, let us say out of 8 crores, you spend 20 lakhs in cash. Then instead of 8 crores deduction, you will be able to get only 7 crore 80 lakhs as a deduction. So if you come under 115 BAA or BAB, you will not be entitled to 35 AD benefit. Also, if you have any loss, let us say out of 8 crores, I have claimed 6 crores and 2 crores was opening balance. Opening balance carried forward, brought forward from the previous year. That I will have to forego if I opt for this. Or I can say I will exhaust this 2 crores and next year or year after that, I will be able to shift to 115 BAA, BAB. So 115 BAA, BAB is an option available to you to claim or not to claim, is an option available to you to claim it in future or now. So you need not claim it now if you feel that right now you're better off not claiming it. So that is how this scheme is. So as I told you, Part C, Chapter 6A, Section 80H to 80TT, except Section 80JJAA and 80LA. 80LA is not applicable to you and me, so I don't talk about it. And accelerated depreciation, that is 32(1)(2)A, additional 20% depreciation for those plant and machinery used in the factory. So let us see Annexure 1. In Annexure 1, I have given the complete details. So what are these Annexure 1? 10AA, 32(1)(2)A, 32AD, not very popular. 32AD, additional depreciation, not very popular. 33AB, tea, coffee. 33ABA, petroleum, natural gas. 35(1)(2). 35, all 35, something to do with the scientific research expenditure. 35 AD, capital expenditure on specified business. Chapter 6A. So we have seen Chapter 6A. So these are the specific exemptions and deductions which you will not be eligible to claim if you opt for 115 BAA and BAB. Now, second point to be noted is company cannot set off any loss carried forward from earlier assessment year if attributable to deductions referred to in one above. As I already told you, if you have any brought forward business loss on account of the above, mostly it could be for 35 AD, because or 35 or 35D. So those things you cannot claim it as a carry forward in this year. However, you have the option of exhausting that under the regular scheme and then opting it for 1 or 2 years down the line. Such loss deemed to have been given full effect to and no further deduction for such loss shall be allowed in any subsequent years. No carry forward of unabsorbed additional depreciation. If you have unabsorbed additional depreciation, let us say opening balance of, you had unabsorbed losses, regular business losses, 3 crores, additional depreciation loss, 1 crore, regular depreciation, 25 lakhs. So regular depreciation 25 lakhs and business loss of 3 crores can be carried forward even if you opt for 115 BAA, BAB. This additional depreciation of 1 crore, you have to give up, but this 1 crore can be added to the WDV, and it can be claimed as depreciation in future. So but the problem is, if you have an opening unabsorbed depreciation of 1 crore 25 lakhs in my example, you don't know whether it is on account of additional depreciation or regular depreciation. That becomes a challenge. I mean, that issue I don't have an answer. So I would say that whatever additional unabsorbed depreciation, we would presume that additional depreciation is actually claimed first, and then only the balance depreciation is mostly out of the regular depreciation, is my view. An alternative view is also possible. I mean, if you don't want to litigate, the best thing is you say that the whatever carry forward is on account of additional depreciation only, and I will anyway add it back and claim the future depreciation over a period of time. All that you lose is time value of money. So getting details about additional depreciation is an issue. Companies may exercise option to shift to lower tax under section 115 BAA after set off of additional depreciation so accumulated. Point number 3, unutilized MAT credit to be given up. Now this is a big challenge. If I have paid MAT in the earlier years, which could have been used out of my regular taxes in future 10 years, I have a carry forward possibility of 10 years. So if I have 40 lakhs of MAT credit, and this year I have to pay additional 5 lakhs of MAT, okay, additional 5 lakhs of MAT, I have to now decide, is it good to pay this 5 lakhs and claim this 40 plus 5 next year, or give up this 40 lakhs and not pay this 5 lakhs, rather get a refund from this year. So these are minor decisions which we have to take, and that is a very interesting decision in our office. We'll have to involve the client, work out the discounted cash flow. If I'm very clear that I'm going to get in future regular profits, out of which this 40 and 5 can be claimed, I would rather pay this 5 lakhs and opt for 115 BAA, BAB 2 years down the line, rather than opt for now and forgo this 40 lakhs. So unutilized MAT credit to be given up. So if the company decides to write off this 40 lakhs, as an auditor, this entire 40 lakhs as an asset will have to be debited to my P&L account. So write off deferred tax asset or MAT credit eligibility from assets as tax expense. So I'll have to write it off as a tax expense in one go, affecting my net worth and earning per share. So my net worth will go down and my earning per share for this year will have to be surrendered. So I will have to take a sacrifice in this year for the sake of a better tax rate in future. So company again has an option to exercise this after utilizing the MAT credit. That is also there. Other business loss and regular depreciation carry forward is allowed as a deduction. So point number 3, depreciation under section 32 determined in the manner as prescribed. Now we were waiting for this for a long time. 1st of October, this notification number 20/2020. This is an 8-page notification which came out on 1st of October. So where it said that the maximum depreciation that can be claimed by such a company opting for lower rate of taxation will be restricted to 40%. That means if the rate of depreciation in the Appendix 1, the income tax gives me depreciation in Appendix 1, Rule 5 of the Income Tax Act gives the rule saying that refer to Appendix 1. Appendix 1 gives me the rate of depreciation. For the moment, if you look into Appendix 1, nothing is more than 40%. So as of now, you can claim 40% depreciation, excepting one, which I will tell a bit later on. So for the moment, depreciation under section 32 determined in the manner as prescribed. The prescription says the maximum depreciation that can be claimed by a company opting for 115 BAA, BAB restricted to 40% of the asset value. Now, 4th point, depreciation in respect of a block of asset which has not been given full effect prior to 2021, corresponding adjustment shall be made to return on value of such block of asset as on 1/4/19 in a prescribed manner. And the prescription has come through the rules that the whatever additional depreciation brought forward, which you are not entitled to carry forward, will be added back to your opening written down value. So 115 BAA allows companies to come under 115 BAA if option exercise under 115 BAB is rendered invalid. So now we go to 115 BAB. So having understood what is 115 BAA, we now come under 115 BAB. So that is what I said, newly established company. New manufacturing companies incorporated after 1/10/2019, commences production before 31/3/2023, not formed by splitting up or reconstruction of a business already in existence. Not more than 20% of the plant and machinery should be second hand. That means not more than 20% of the plant and machinery must be previously used in India. So if it is used outside, second-hand machinery from outside can come in, but second-hand machinery within India should not be used here, more than 20%. Not used any building previously used a hotel or convention center which has claimed deduction under 80 ID, very rare situation. So any business, now that there is a possibility that a company may shift its profit from 30% company to a 15% company. Let us say for getting this benefit, I have now started a new company, and I already have a 30% company. So I will now be attracted to shift all my expenditures from this company to this company. I will show higher profit in a 15% company and a lower profit in 30% company. So therefore they say between associated and closely connected entity companies, there should be a transfer pricing study conducted by a chartered accountant who should say that the transactions between these two associated or connected companies are at arm's length. So any business transaction of more than 20 crores in the previous year by this company, 15% company, with its closely connected person will be considered as a specified domestic transaction and will be subject to transfer pricing study to determine if such transactions are at arm's length. Excess profit, if at all, which is identified by the transfer pricing study or by the officer, will be taxed at 30% instead of 15%. Not eligible for claiming certain exemptions and deductions, what we have already seen in lecture 1. Company cannot set off of losses, which we have already seen. Depreciation under 32 in a manner prescribed, which is restricted to 40%. Now the question comes, what is manufacture? What is manufacture? Manufacture has been defined in section 2 subsection 29BA to mean manufacture with its grammatical variation means change in a non-living physical object or article or thing. A, resulting in transformation of object or article or thing into new and distinct object or article or thing having different name, character and use. Different name, different character, different use. Or bringing into existence of new and distinct object or article or thing with a different chemical composition or integral structure. Now in section 115 BAB, they said for the purpose of this section, the following shall not be considered as manufacture. Number 1, development of computer software in any form or in any media. Number 2, mining business. Number 3, conversion of marble blocks or similar items into slabs. Bottling of gas into cylinder. Printing of books or production of cinematography film or any other business notified by the central government. For it they are not notified apart from this 5. In Finance Act 2020, they said company engaged in generation of electricity is also considered as business of manufacture and eligible for concessional rate of 15%. Now the question which came out was, can a company which is into construction, can a builder consider himself as a manufacturer? Srinivasarao garu, what is your answer? Can you say that a builder is a manufacturer?
Definitely not, sir.
Yeah. Now, what is the basis for saying a builder is not a manufacturer? There are a lot of citations already available. Building is a construction activity and not a manufacturing activity. Builder is not competent to submit form number 27C with respect to TCS, which circular had already come out. A builder does not buy timber for manufacturing, processing or producing articles or things. A builder generally purchases timber for the purpose of construction of a building. So construction and manufacture are two different things. So construction of a builder cannot come under 15%. He can definitely come under 22% under 115 BAA. Now this is a table which shows the various rates of tax under section 115 BAB. Income from the, suppose a company is into manufacturing and also into trading and he is newly established. Can he come under this? The answer is yes. What I said is, for manufacturing, you have to pay 15%. And for trading, that is other than manufacturing, you have to pay 22%, but without claiming any deduction or allowance of any expenditure. That means all expenditure and deduction should go to 15%. More or less, the entire revenue itself will be taxed at 22%. So that is how they have, because otherwise there will be a lopsiding. You will be lured to take more to 15%. So if in A above, profit is not at arm's length, what we have already seen, then it will be taxed at 30%. Short-term capital gain on assets on which depreciation is not allowable is taxed at 22%. So this is how 115 BAA, BAB, and option they have told. How do you opt for 115 BAA, BAB? You will have to file a form 10 IC if you want to come under 115 BAA, and form 10 ID if you want to come under 115 BAB. Once the option is exercised, you subsequently cannot be withdrawn. Point is, you will have to continue under this option. But you have, if you come out and want to claim additional depreciation, want to claim 10 AA, you can do that, but never will you be able to go back to that particular option in future. So that is how the scheme has been told. So we have seen this. Is that clear, Srinivasa Garu?
It's a perfect ending, but people are asking for the 115 BAA once again, sir.
Okay, let me 115 BAA.
Yeah.
Very important, because most of our companies, existing companies, are shifting from 30%, 25% to 22%. And the best thing is, two advantages to such a company. One is reduced rate of taxes. Number two is no application of MAT. MAT will not be applicable to such an entity. Two advantages. What are the disadvantages? The disadvantages are they will not be eligible to get certain exemptions and deductions, what was just now discussed. 10 AA, 35 AD, 80 HH to 80 TT, except 80 JJAA. That means a company which is opting for 115 BAA and BAB can also claim the benefit of 80 JJAA, which we discussed in the earlier time. So accelerated depreciation they cannot claim. Accelerated depreciation under section 32(1) clause 2A is available at normal depreciation 15%, 10%, whatever the regular rate of depreciation is available. For a manufacturing company which is using plant and machinery in its manufacturing facility, you can claim additional 20% depreciation. That cannot be claimed in future. Okay, so that will be one disadvantage. So disadvantage number two is
What about the past, sir? What about the past? They already claimed one?
Already claimed, no problem. You've already paid and filed your return. If any brought forward depreciation loss, additional depreciation loss, or brought forward losses on account of 35 AD and things like that, that cannot be claimed. That cannot be carried forward. That cannot be carried forward. However,
the element of additional depreciation will be deleted from that one.
Additional depreciation within the brought forward will be carved out and added to your opening return on value, and future, let us say let me tell you, your opening return on value was 10 crores and additional depreciation was 25 lakhs. Additional depreciation was 25 lakhs. Regular depreciation was 1 crore. So 1 crore regular depreciation brought forward, you can claim. 25 lakhs additional depreciation, you will not be able to claim, but you will be adding it to this 10 crores. So your opening WDV instead of 10 crores will stand at 10 crore plus 25 lakhs, 10 crore, 25 lakhs. Because this 25 you are not eligible to carry forward. So if you are not allowed to claim 25, and if your total block of asset were to be 20 crores, now the objective is you will have to claim depreciation of 20 crores over a period of time. The additional depreciation of 25, if it is not allowed, then you will be able to claim only 19 crore 75 lakhs depreciation. So that is why there was an objection like that. Then they said, okay, whatever additional depreciation, you will not be eligible to carry forward in 1 year, but you will be allowed to add it back to your opening WDV and claim depreciation regularly in future. Okay. So second disadvantage is opening carried forward or brought forward depreciation loss can be carried forward. Brought forward regular business loss can be carried forward. Brought forward losses, that's why point number 1, 2.1, such losses deemed to have been given full, no carried forward of unabsorbed additional depreciation unutilized MAT credit to be given up. That is if you want to go for this new scheme, no MAT in future. So therefore, whatever MAT you have paid in the past also has to be surrendered. But then you have an option. If you feel that my surrendering is a big loss, then you claim it. Because see, one thing we have to see, forever if I'm going to pay under MAT, it's better to surrender MAT and stop the MAT payment from now onwards. But by the MAT which I have paid, even over a period of time, I will have to, what should I say? I will have to extrapolate my profits. I have to project my profits in 3-4 years and see if my regular taxes will come, by virtue of which I can claim the MAT credit. Then I will say, we have done all this exercise in our office, and then I will have to do the discounted cash flow. What is the advantage of paying tax today and getting the benefit tomorrow? There is a time value of money. I do all those adjustments and present the case before the client. And finally, we jointly take a decision whether to surrender the MAT or to continue with the regular scheme. So other business loss and depreciation can be carried forward. Depreciation in future will be restricted to 40%. Means, please understand, the rate of depreciation for computers is 40%. There is one rate at 45%. Let us say for machinery, cars used on hire, today rate of depreciation is 45%. So instead of 45%, it will be restricted to 40%. So that is the restriction of 40% meaning there.
Sir, what about air pollution equipment, etc., which may qualify for 100% like that?
No, today, sir, there is nothing in 100% bracket, sir. If you go through Appendix 1, all pollution control equipments are also restricted to 40% only. Maybe why they're telling this is we have a thinking that they are going to increase the rate of depreciation. So earlier, if you remember, for computers, it used to be 60%. For books, it used to be 80%. Now, all that, couple of years ago, they brought it down. The present rate of depreciation, nothing in the Appendix 1. So please open income tax rules, last Appendix 1. You will not have any rate of depreciation which is more than 40% at this point in time. Okay?
Yes, sir. One more question that they are asking is, in case of individuals covered under Section 44AB, how about the labor expenses, which does not have any proper invoice for the labor expenses? They are telling that subcontractor things, they does not having just they do the TDS part, but these things are not.
Sir, what I would say is, earlier we had to take a stamped invoice. Today you don't even get a new stamp. So you will have to have a voucher wherein very clearly his name and address is entered. His PAN number may not be there, but then depending on the type of entity, the income tax department is giving a lenient view because of that. So if you are a very big entity, what we are doing is, if you are a very professional entity, you will outsource it to a sort of a unprofessional in between. There will be one AB Reddy and Sons will be acting as a contractor. This company, an MNC or a big company, will give it to AB Reddy and Sons, and AB Reddy and Sons will be in turn giving this contract charges, because this company will give everything in check only. But if the company itself is given directly to the laborers, then you will have to take it and ensure that maybe collect their Aadhaar and their whatever proof that they are there. Take their signature, as far as possible, transfer it to their bank account. That is the best thing. So that is the safest thing. If you have to pay it in cash, when I would say that today there are other better modes of payment. There is a phone pay. We'll come to that. Other 8 modes of payments are there. So to make your life simpler, because anything which is paid in cash is seen with a doubt. It's seen with a doubt. So please avoid that as far as possible. Yes, sir. Any more questions, sir?
Thank you, sir. Nice of you. Go ahead, sir. Thank you.
Yeah. So let me now cover what are the changes which happened on 1st of October 2020. There are 4 changes. 4 changes happened in this 8-page circular. This 8-page circular, I have brought it down to one page PowerPoint. Depreciation, they have touched. Rule 5. They said for 115 BAA and BAB companies, BAC and BAD is for next year. You remember that rate of taxes have got reduced for individuals. Instead of going in from 0 to 5, 5 to 10, 10 to 15, whatever, they have said for every 2.5 lakhs, they have come out with the 2.5% slab. That is also an option. For them also, they have to give up all the benefits. For them also, for depreciation will be like this. For cooperative societies also BAD is coming into picture, 115 BAD. So for them, so I'm putting for yellow here because for me, for this year only BAA and BAB are important. Regular depreciation under 32(1)(2) restricted to 40%. Otherwise also, that's what I just now told to Manikyala, as I see there. Otherwise also, so except for motor cars, lorries, etc., purchased between 23rd August to 31/3/2020, the rate of depreciation is 45%. So if you are coming under that 45% and you are claiming 115 BAA, BAB, you should restrict it to 40%. Now, unobserved additional depreciation under 32(1)(2)A not claimable added to WDV. So when you should add it on 1/4/19 to 115 BAA cases. For BAB cases, you will not have because you have now started your company afresh, newly established manufacturing company. And from 1/4/90 to 115 BAC and BAD cases, that individuals and HUF who can come under that option 115 BAC, cooperative societies BAD cases. Rule 21 AF has been inserted to say option for claiming 115 BAC for individuals and HUF from next year is 10I.
I think we have an internet issue with the speaker. Chairman Garu. Yeah, we had a 2 to 3 second break in at the beginning also. Maybe can you call him, sir?
Yeah, I'll do that, sir.
Dear participants, please bear with us. We will try to establish the connection as soon as possible. In the meantime, what I may just put before you is that Vijayawada branch has a YouTube channel which has a number of videos which are available, and they are available for any number of times for replays. It is a knowledge repository wherein you have videos sessions which have been conducted by the Vijayawada branch right from the beginning of this pandemic. Let's say the 1st of April onwards, we have started a series of seminars covering varied topics, be it on income tax, be it on GST, be it accounting standards, whatnot. We have covered everything, almost all, which are applicable to chartered accountants as well as CA students. What I will do is I will try to share the screen. It's not that you are not aware of the YouTube channel of Vijayawada, but what I will try to put before you is the various videos which are hosted on the YouTube. You can have just a glance of it. Let's go to the YouTube channel of Vijayawada branch. You can search for Vijayawada branch of SIRC of ICAI, Vijayawada branch of SIRC of ICAI, or you can go here. Here we have this channel, and you have a list of, you also have a playlist wherein various programs. You can find here the tax audit hi-fi, wherein each day's videos are placed in this playlist. Also, this recently we had a refresher course on practical aspects relating to GST, wherein yeah, and we have this company law, the private limited companies, and we had some series of sessions. 11 video sessions are there with regard to this company law, and also covering the private limited companies, which has been dealt by an eminent speaker. And also those who are going for or attempting the valuation examination, for them we have a playlist for these important topics on the valuation course. And we had a crash course for CA Foundation, wherein all the subjects have been covered, and each subject was covered for 5 days, wherein the most important topics relating to that subjects were dealt. And we are having a continuous programs of workshop on public speaking. This is a 25-week program, wherein so Mr. Satish Valveti, who is from Vizag, he is an expert in public speaking, and every Sunday from 11 to 1 we are having that program, and all the previous sessions are available in this particular playlist. And you, Sharan Kumar from Hyderabad, who is an expert in Excel, he is conducting some 25 days sessions, and it is on every Saturday morning or every Saturday evening. That's from 6 p.m. to 8 p.m. he will be taking up this session. We already concluded 9 sessions, and the remaining sessions will be followed in the coming Saturdays. That is from 6 p.m. to 8 p.m. And also those who want to take up the IBC course, we had a refresher course on IBC dealt by expert and eminent faculties, which include RCMs and CCMs also, if I remember correctly. Therein we have a series of videos which deals with the refresher course on, and it is an IBC. And also we have these some more programs, maybe they are not available as playlists, but if you browse through the videos, you have a lot number of videos wherein you will find useful sessions, be it CCMs, RCMs, as well as eminent faculty and speakers. Right. So, Chairman sir, is the speaker back? I think we are yet to establish the connection with the speaker.
Not yet connected, Andy. And there is a problem with his computer also. So he's connecting with the other computer. He's
okay. Okay. Someone, Smitaji, how can we get the notes for the topics of GST and income tax, which is there in the playlist? In fact, as far as the PPTs are concerned, we are sharing the PPTs which were shared by the faculty in the YouTube channel itself, or where at the time of that course, if we have created any WhatsApp group as we created for Hi-Fi, in those groups we were sharing. That was the practice that was being followed by us. So if the PPTs were shared by the, yeah, actually the speaker sir is back. Sir, you're welcome back. Sir, please unmute himself. Unmute, sir.
The host has unmuted me.
Yeah, now it's okay, sir. It's fine. Please continue, sir.
Yeah, sorry for the interruption. That is, I think we talked about Corona, and one of the problems with the virtual mode is this. We'll have to bear with the problems. Yeah, Form 3CD has got changed. Form 3CD, we'll have to say under clause 8. Under clause 8, if you see, we'll have to say indicate the relevant clause of section 44AB under which audit has been conducted. Whether it is under A, clause 44AB, A, B, C, D, or E. Now they have introduced a clause number 8E, whether opted for 115 BA, BAA, or BAB. Now BA has been there for a long time. I mean, I'm not talking about that today. although it is there here, BA is the gist is this: new manufacturing companies, domestic companies incorporated on or after 1/3/2016, given an option to be taxed at 25%, subject to giving up certain benefits, what was covered under Annexure 1. So most of the companies, if you have not opted for this anyway, at least in Bangalore, I've seen hardly any companies. So BA was already there. So BAA and BAB has been introduced from this year. So if they have opted for that, we have to give here. Now the challenge, Ravi Kishore Garu, is that we are filing the 3CD report now. But he will file Form 10(1)(c) or 10(1)(d) before filing the income tax return. For filing the income tax return 31st January, for filing the tax audit report 31st December. So what we are suggesting is, if he are filing the tax audit report and he has claimed the option, we ask him to file 10(1)(c) and 10(1) or 10(1)(d) before I file my 3CD report. So that is a point I wanted to tell here. Now, clause 18 amended to insert adjustment. If you see clause 18 has got to do with the depreciation schedule, that is. So what they have done is description of assets, plant and machinery, rate of depreciation 15%, actual cost or return on value as the case may be 10 crores. Adjustment made to return on value under section 115 BAA. So this is what I told in my example: 25 lakhs for unabsorbed additional depreciation will have to be added back here. Adjusted return on value will now stand at 10 crore and 25 lakhs. So additional deductions, then everything will continue. So that is another change. Then clause 32, brought forward losses or depreciation table format changed to provide section 115 BAA. So this is clause 32 talks about depreciation of brought forward losses or depreciation allowance in the following manner. So there they have brought in two additional columns, number 5 and 6, where they said all losses not allowed under 115 BAA and amount of adjusted by withdrawal of additional depreciation on account of opting for taxation under section 115 BAA will have to be given under clause 32A. So these are the changes which have happened in form number 3CD. Form 3CEB. Form 3CEB I may not touch today, but there are certain changes in the transfer pricing report issued by a chartered accountant who is giving the international taxation arm's length certificate, and ITR 6 has also got changed through this particular notification. Yes, sir. Are there any questions, Srinivas Rao Garu?
Sir, currently we have no questions in the chat box. If any of the members are interested in asking a voice question, you please express your intent in the chat box. We will enable your voice. Else, if you are comfortable by typing the question in the chat box, you are most welcome.
I'll proceed further. So now we will talk about 3CA, 3CB, no change. But in 3CD, two of the clauses every year they have been deferring. So this year also it will continue to be deferred. What are those two clauses? Clause number 30C dealing with GAR and clause number 44 dealing with GST. So this has been deferred for one more year. So here let me raise up a issue. Now a cooperative society is to get accounts.
Sir, someone want to ask you a question. Yes, KG Tech,
Yes, sir.
You can ask.
Yes, sir. Speaking. Am I audible, sir?
Yes, sir. Yeah, please go on.
Sir, like in additional depreciation, suppose for less than 180 days, if prior to 1419, we had claimed 50% of that. So then 50% is lost, na? It can neither be added nor be availed.
No, not necessarily, sir. That will not come in as additional depreciation. It will come in as a regular depreciation.
No, but just one.
You have added 1 crore of plant and machinery, for which if you had added before Gandhi Jayanti, I say Gandhi Jayanti is the cutoff. 2nd of October is the cutoff for it being 182 days. So if
right, sir.
Before Gandhi Jayanti, you will be able to get entire 20%, that is 20 lakhs.
Right, sir.
Otherwise, you will be able to get only 10%, which is 10, in this case, 10 lakh rupees.
So that means the balance is lost in next year, na? Because
no. That 90 lakhs of WDV, whatever is available, 90 lakhs of WDV, whatever is available, you can claim through 90 lakhs regular depreciation.
Okay. I thought that then additional, again we won't be able, it will become a part of WDV whatever availed.
Exactly.
Thank you sir. Thank you.
Sir, we have 2 or 3 questions in the chat box.
Sure.
Shall I go through that?
Yeah, please.
What about the OPC comes under domestic company? Whether OPC comes under domestic company is the query. One-person
company comes under domestic company. Yes, sir. Because it is registered under the Companies Act, it will become a domestic company.
Yeah, Kiran Agarwal ji is saying that due to disconnection, BAC and BAD could not be heard. Please repeat that. So yeah, may I request you to please, you can watch it on YouTube replay. It is available on the channel. You can very well watch it there.
Yeah, let me just tell you in short, BAC is not available for financial year 1920. From 2021 in budget 2020, the finance minister gave an option for individuals and HUF to come under a reduced for incremental tax slabs. Incremental tax slabs, that is 5 lakhs to 7.5 lakhs, 7.5 lakhs to 10 lakhs, 10 lakhs. So they have added in between slabs. So one can use the reduced rate of taxes by giving up lot of benefits and exemptions as told in Annexure 1. That is 115 BAC, applicable for the current financial year 2021, assessment year 21-22. BAD, 115 BAD is for cooperative societies who can also opt for the lower rate of taxation by giving up certain deductions and benefits. So for this year, what is applicable is 115 BAA and BAB. Yes.
Yeah. One more question is with regard to 115 BAA.
Yeah.
Can it be claimed in the return of income for assessment year 21-22?
Yes. If you don't want to, let us say you have a benefit of not, let us say you have what you call, 1 second, I'm just changing my name, or it doesn't matter. It doesn't matter. You can claim it in 21-22, 22-23, 24-25, anywhere, anytime you can claim it, as long as you feel that the benefit of, let us say you have additional depreciation, you have 35 AD benefit, you want to exhaust all that and then you want to claim it in future, you can do that very well, no problem. You can do it any future year. But once you claimed it, you will have to continue in that particular mode. You cannot go back to 35 AD or 10 AA, etc. But if you want to claim that, what the wordings we are getting is, if you come out of the scheme, you cannot re-enter the scheme forever. That is how it is.
Yeah, Ravi Shankar ji is asking whether you have to opt in with any firm to opt for regime under 115 BAA and BAB. Is there any form to opt for those sections?
For 115 BAA, I have told here, if you see here, 115 BAA is 10 IC for 115 BAA and 10 ID for BAB. This has to be filed before filing the income tax return. What I just now told you is, don't wait for the income tax return. Before you file your 3CD report, ask them to file. Otherwise, let me tell you what happens. Otherwise, in this particular, whether opted for 115 BAA, BAB, you say yes, and he has not filed that particular return, particular form, it will be dangerous. So therefore, we suggest that this should be filed, the form should be filed first, then you file the form 3CD with this yes.
Yeah, can you, he's asking, can you share some of the contents of the form, or is it possible?
So the form is very simple. The form is very simple. You can open up your, go to the Google and you will see it is very simple form. You just have to say some declarations that I'm not going to claim these deductions, and therefore I would like to file this particular list. There's nothing great about that form.
Fine, sir. Sir, please continue, sir.
Yeah. So this is one issue I thought I will place it before you. A cooperative society is to get its accounts audited under the applicable law. The turnover of the cooperative society is 3 crores. The assessee is to get its accounts audited and obtain a report in form 3CA and 3CD. The cooperative auditor gave his report only on 31/12/2019 for assessment year 1920. The tax auditor could not give his report in the absence of the report of the cooperative auditor. The tax auditor could give his report in form 3CA only on the next day, 1/1/2020. The return was filed on 2/1/2020. The assessee claimed deduction under section 80P as per the new income tax law, for claiming deduction under section 80P, return should be filed within the time specified under 139(1). The CPC has disallowed the claim under 80P. What is the remedy? Because it is the fault of the cooperative auditor for having given the audit report on 31/12/2019. Now, why I brought up this particular issue, this was an issue which was posted in one of the sessions. I thought this is a very important issue which we need to discuss. One thing we have to note, that to claim Part C, any of the deductions under Part C of Chapter 6A or Chapter 3, Section 10 exemptions, and most importantly, Section 12A, registered trusts, if they want to claim exemptions under Section 11, they have to file, all those trusts, they have to file their income tax return within the due date as told under 139(1). Any delay for whatever reason, while the reasons could be there for fighting it out, that's a different issue. Please ensure to file your income tax return on time. So this particular 80P comes under Part C of Chapter 6A. So there, since you have filed your income tax return belatedly, you are not able to claim the income tax benefit. Now, what is the solution for this? If I were to be the tax auditor of this company, I would have, see, anything which is subject to audit, which is otherwise audited, I use Form 3CA. And this is the point I'm trying to say. 3CA and 3CB are two forms for tax audit report. Form 3CA is to be used whenever audit is already done under some other law. 3CB is to be used when you are doing the audit for the first time. Now, can you file 3CB in the case of a company? The company has to be audited under Companies Act. So therefore, normally we use Form 3CA. But if let us say, if Mr. Ravi Kishore were to be the company auditor and I am the tax auditor, Ravi Kishore has not done the company audit for whatever reason. Okay. If Ravi Kishore has done the tax audit, company audit, then I will use 3CA. But if he has not done the tax company audit, and I feel that I want to complete my tax audit because of timelines, etc. here, I will do it in Form 3CB. I can do the tax audit of a company in Form 3CB and complete my tax audit without waiting for the audit of the statutory auditor of the company. So even in this case, the statutory auditor of this cooperative society, the tax auditor of this statutory cooperative society, without waiting for the audit report of the cooperative auditor, he could have gone ahead and filed Form 3CB and 3CD and completed his tax audit, filed his income tax return, rather than wait for him and suffer in this particular manner. Now, if such a company comes to me for litigation now, I will try to protect the cooperative society by litigating, saying that we have sufficient reason for not filing the income tax return, etc. But that could be a litigating, and the case can go any which way. But the best thing is the auditor should have gone into Form 3CB and completed the tax audit and filed the return on time. What do you say, Ravi Kishore?
Yes, someone has posted in the chat that can you take the rescue of 119 by approaching the assessing officer?
Quite possible. I mean, see, you can do that. You can do that. But then those are possible yeses and nos. You can have a no as an answer. So I would suggest, if I were to be the tax auditor, I would have gone ahead and completed my assignment based on filing Form 3CB. I have an alternative. Why go to them and wait for yes or no answer? I could have gone ahead, completed my audit using 3CB. But there is a fundamental difference between 3CA and 3CB. In 3CB, if I'm using, I am doing the audit of the financial statements also. Now 3CA, when I am using 3CA, the audit of the financial statements have happened by some other auditor or by me, and my audit report is already given on the financial statement. Only the matters which are required to be told in 3CD is what I am certifying through 3CA. But in 3CB, I am certifying the financial statements. Also, if there are any qualifications on the financial statement, I have to mention that in clause 3 of Form 3CB, where there is an observations column. And then in clause 5 of 3CD, I will say any observations on 3CD items. If let us say in the case of a 3CB, some accounting standard 15 gratuity liability has not been provided, provisions have not been done as per accounting standard 29, then I will use clause 3 of 3CB to tell that. In the case of 3CA, that would have anyway got told in the main audit report under SA 700. When the main audit report is issued, that would be told. So that is a point to be noted here. Next, we come to the most important aspect or the most important change which has happened. And for that, let me take you through 44AB. Let me complete 44AB and then I will talk about the changes. 44AB has got 5 clauses. 44AB is the heart or the life of tax audit. Tax audit is talked about in 44AB without using the word tax audit. In the entire Income Tax Act, we don't have the word called tax audit. The audit which is done for income tax, there are a lot of audits, but popularly we call 44AB as a tax audit case. So audit of accounts of certain persons carrying on business or profession. Now every person carrying on business shall, if his total sales, turnover or gross receipts, as the case may be, in the business is more than 1 crore in any previous year. So if you are a businessman having turnover of more than 1 crore, you shall get your books of accounts audited unless you fall in the subsequent clause. Or carrying on profession shall, if his gross receipts in the profession is more than 50 lakhs in any previous year. That means if you are doing business more than 1 crore, you come under clause A and do your tax audit. If you are any profession more than 50 lakhs gross receipt, then you shall subject yourself to tax audit. Then come to clause C. If profits from business are deemed to be profits under section 44AE. What is 44AE? You are in the business of plying or, very interestingly, plying, hiring or leasing of goods carriage. Plying, leasing or hiring goods carriage, and you are owning less than 10 trucks in any time during the previous year. If you are at any time holding more than 10 trucks, you are not eligible for 44AB. At any time during the previous year, you are holding less than 10 trucks and below, then you are coming under 44AE. 44BB and 44BB, I would rather avoid it, is for non-residents, mineral exploration or civil contracts done on a turnkey basis, not very popular. And he has claimed his income to be lower than profits so deemed. That means they have told for 44AE, if you are owning less than 10 trucks, and you will have to now say, is your trucks are less than 12 tons capacity or more than 12 tons capacity? If it is less than 12 tons capacity, your PP, I'm using the word PP, presumptive profit, shall be 7,500 rupees per truck per month if it is less than 12 tons capacity. If it is more than 12 tons capacity, it is 1,000 rupees per ton per truck per month. Let us say you are having a 14-tonner truck, then it is 14,000 rupees profit per month per truck. Okay. So that is the minimum profit that you have to declare. Anything more is okay. So if you are showing anything less than this, then you shall, whatever is your turnover, whatever is your turnover, when you come under 44AE, trucks, number of trucks is the criteria, turnover is not the criteria. Turnover can be 10 crores also. You don't have to get yourself audited if you are having less than 10 trucks. If you are owning less than 10 trucks, 10 crores turnover also, you don't have to do tax audit, as long as you are able to show this presumptive profit of 7,500 rupees per month for less than 12 tons capacity, and more than 12 tons capacity, it will be 1,000 rupees per ton per truck per month. Now, next D, if profits from profession are deemed to be profits under section 44ADA. Now 44ADA means only those specified professionals. Now who are the specified professionals have been told there? Doctors, engineers, architects, accountants, company secretaries. So like that they have brought in film artists, sports professional. Now there are certain designated professionals and specified professionals, specified in the rules. They have brought in some notifications by virtue of which, so they are specified professionals. So for specified professionals only, let me make a distinction between business. Now you are carrying business and profession, then you can split it into business and profession. Profession can be further split into specified professional and other professionals. So when we are talking about 44ADA cases, only the specified professionals will come under 44AB clause D. If profits from profession are deemed to be profits under 44ADA, and he has claimed such income to be lower than the profit so deemed, and his income exceeds maximum amount which is not chargeable to income tax in any previous year. So in short, if my turnover is less than 50 lakhs and I am a specified professional, I shall show profits at 50% of my turnover as my profit. Otherwise, I will have to get myself tax audited. Clause E, carrying on the business shall, if provisions of 44AD clause 4 are applicable and his income exceeds maximum amount which is not chargeable to income tax in any previous year. Now E comes for only business people, and only those business people who have earlier opted for 44AD. If he has not opted for 44AD, clause E will not come into picture at all. Let me reiterate. I will take you to 44AD clause 4. Then you will understand what I'm saying by that. Where an eligible assessee declares profit for any previous year in accordance with the provisions of this section. That means I'm just giving you a situation. Ravi Kishore Garu. My turnover is 80 lakhs. I have shown 3% profit and I come to you for advice. Will you subject him to tax audit because he is not showing 8%?
Based upon the tax which he is willing to pay.
No, I'm just saying 80 lakhs is my turnover. I'm showing 3% profit. You know that I have to show 8% or 6% as the case may be. I'm showing only 3%. Should I say that if you don't show 8% or 6%, I will subject you to audit under 44AB clause E?
Yes, sir.
The answer is no. I'm just going to prove that. What I'm saying is this year I have started my business this year only. I have started my business this year. So who should now come under 44AB clause E? Carrying on business shall, if the provisions of 44AD4 are applicable. I will see whether 44AD4 is applicable. If you see 44AD4, where an eligible assessee, I am an eligible assessee because I am an individual. Eligible assessee has been defined as individual, HUF, partnership firm not being an LLP. So I am an individual. Declares profit for any previous year in accordance with the provisions of this. So in any previous year, have I declared profit under 44AD? The answer is no. I have started my business now. And he declares profit for any of the 5 assessment years relevant to the previous year, succeed. So once I choose 44AD, that's the question that my friend initially asked. Once I choose 44AD, for next 5 years, I have to come under 8% or 6%. If not, I will have to subject myself to tax audit.
No, this is the case only for the first year, sir.
Only for the first, no, first year. Let us say next year. Next year. Now I have completed my first year. I did not choose. I show 3%. Second year, again, I am showing 80 lakhs at 3%. Okay, let me increase it to 90 lakhs. In second year, my profit turnover is 90 lakhs and I am showing 4%. 90 lakhs and 4%. Then also I will say, in the previous year, I have not chosen 44AD. Now, third year, my turnover is 1 crore and 20 lakhs. 1 crore and 20 lakhs. And I am showing 5%. I am showing 5%. Should I subject myself to tax audit, yes or no?
Will 44AB strike, sir?
Exactly. 44AB clause A comes into picture at that point in time. At that point in time, he has two options. Either to go in under A and get himself audited, or come under E and say declare 8% without tax audit. Because if you come under clause E, your turnover is up to 2 crores. Up to 2 crores, you don't have to get yourself audited. Am I clear? Ravi Kishore Garu, am I clear on that?
Sir, one more thing, sir. You please also think about this point, sir. In written form, when we fill that ITR 3, if we are offering 8%, we'll straight away go to that 4, sir.
Correct.
But if you are not offering 8%, 4 will not be allowed, sir.
3.
We have to go for 3.
Correct.
But when you go for ITR 3 and have 80 lakhs as turnover, offer only 3%, then there is a danger of getting a 154, sir.
That is quite possible. I mean,
because while processing the CPC will give a defective return, sir.
Not necessarily. They should not. To that extent, I can say that see, law should override their. They cannot consider it as a defective return because it is not subjected to tax audit. I am talking law. There are so many things which the CPC is doing which is not correct.
Yes, sir. There is a chance that for issue of 139.9, sir.
No, but then we have to respond saying that I will never come under this, so therefore it is not to be considered as a defective return.
Right, sir.
So now let me now come to the crux of the situation. So if our 44AB, how many turnovers are there? There is a 50 lakh turnover, a 1 crore turnover, a 2 crore turnover, and a 5 crore turnover. So there are 4 turnover limits now that is specified. And there is no turnover specified at all for some cases. What is that case for which turnover is not specified? 44AE.
Sorry to interrupt you, sir. Someone wants you to stress that point once again with regard to first year 80 lakhs, second year 90 lakhs.
Yeah. See, what I said is a person, this is a point I'm trying to say, that if a person has opted for 44AD earlier, then he shall continue under 44AD for the next 5 years. If he has never opted for 44AD, that is what is coming under, if you come under 44AB clause E, it says carrying on business. So it is not for professional. Carrying on business shall, if the provisions of section 44AD4 are applicable and his income exceeds maximum amount which is not chargeable to tax. So let us see what is 44AD clause 4. Clause 4 says, where an eligible assessee declares profit for any previous year in accordance with the provision of this section means 44AD. If he has declared under 44AD earlier, so 44AD is an option available to me. You cannot force 44AD on me. That is the point I am trying to argue. So 44AD is a beneficial provision which says, what does 44AD says? Notwithstanding anything to the contrary contained in 28 to 43C, in case of an eligible assessee engaged in eligible business, a sum equal to 8% or higher shall be deemed to be the profit. So if I want to come under 44AD, I will be given the benefit of not covering section 28 to 43C, such as TDS not done, disallowance of 30% will not be applicable if I come under 44AD. I have done some cash payment of more than 10,000 rupees per day per person. Then also it is considered as no problem. As long as my turnover, let us say my turnover is within 2 crores. For coming under 44AD, the limit will be up to 2 crores turnover. Only for individuals, HUFs and partnership firms, up to 2 crores. Those of you who opt under 44AD, showing 8% or 6%, benefit is all these smaller non-compliances will be, what should I say, mafified. I mean, it will be given a go by. It will not be considered as a deviation. 40A3, 40A1A, 43B, all these things will be not applicable. So 28 to 43C will not be applicable to me as long as I show 8%. If I don't want to come under 44AD, I will be subject to 40A1A disallowance. Even for 80 lakhs, if I show 3%, I will have to say 40A1A disallowance. I will have to 40A3, I will have to check. I will also have to maintain books of accounts. I will have to maintain books of accounts if 44AA is applicable, by total income is more than 1,20,000 or 2,40,000 being an individual. So in that context, I'll have to maintain books of accounts. If I come under 44AD, books of accounts also need not be maintained. So that's the point I'm trying to say. So now let's go back and see. I've got turnover ke liye 5 types: 50 lakhs, 1 crore, 2 crore, 5 crores, and unlimited turnover also no tax audit. Unlimited turnover, no tax audit only in the case of 44AE. I don't look into, in the case of a goods carriage person, turnover is not the criteria, number of vehicles is the criteria. So let's rule that out. And in the case of professional, 50 lakhs is the criteria. Only for the businessman, I have 1 crore, 2 crores and 5 crores. 1 crore for every business, 2 crores only if you are coming under 44AD. That is eligible assessee, individual, HUF, partnership firm not being an LLP, up to 2 crores. If I am showing 8% or 6%, I don't have to do 2 crores is the criteria. Now let's talk about for whom is 5 crores is applicable. from financial year 1920, in the budget 2020, they brought in a very interesting, with effect from 1920, what is given in yellow. The threshold limit for tax audit under section 44AB increased from 1 crore to 5 crores. What was 1 crore in A has got increased to 5 crores if and only if, IFF means mathematically if and only if, total cash receipt is less than 5% of the total receipts and the total cash payment is less than 5% of the total payment. So it could be a company also. In our office, we have a company whose turnover is 4.8 crores and all their receipts are exports. So no cash receipts. And all their payments are done in permitted modes. They're done in permitted modes, nothing in cash. So 4 crore 80 lakhs, I'm not doing the tax audit this year. So that is a point to be noted. Only it is applicable only if it is into business. If it is a case of a profession, then for 4 crore 80 lakhs, that is not applicable. 50 lakhs is the cutoff.
Sir, but still that transfer pricing report is to be done, sir.
Transfer pricing report is absolutely required to be done, sir.
Yeah, because I too deal with such a company.
Yes. Yes, more than 1 crore, more than 1 crore, you have to have documentation. In any case, you have to issue the form 3CE report you will have to give.
Yes, sir.
Yeah.
So there is no relaxation as far as transfer pricing is concerned.
Sir, that is a different subject.
Different subject.
Study whether it is done at arm's length between you and your associated enterprise. So here you don't have to go into 40A3, 40 because 40A3 is not at all, because everything is done in proper 269 SS, 2690, everything is, less than 5% is in cash.
Because in 3CD there is a query relating to transfer pricing also.
Yes.
That can be avoided.
Correct. Yeah. Now let us now talk about this 5% rule. I just wanted to elaborate on this 5% rule. Threshold limit for tax audit under section 44AB increased from 1 crore to 5 crore if and only if the total cash receipt is less than 5% of the total receipts. Here he is not talking about cash sales. He is talking about the total receipts in the receipts and payment in the cash book. In the entire cash book, receipts could include even sale of fixed assets, capital coming in, unsecured loans, everything. So payments could include not only your P&L account pay, it will go to, let us say, purchase of fixed assets, taking of, repaying of loans, payment of capital, everything is covered under payment. So total cash receipt is less than 5% of the total receipt and total cash payment is less than 5% of the total payment. So then your tax audit for business case will go up to 5 crores. Now here I want to bring out certain, issues, caution rather, applicable to all assessees, including companies. Now what about contra entries? Let us say I have drawn 50,000 rupees from bank as cash. Will it be considered as cash receipt? Yes or no? Ravi Kumar Garu, what is your view? Ravi Kishore Garu, you are there? Yeah, okay. So the question that I am asking is whether the contra entries also should be considered for the purpose of calculating the cash receipts. Srinivas Rao Garu, you are there? I have to put on your video so that I know that you are there and I don't have to really ask this question. Okay, now I am seeing Manik Kyala. Can you, sir, please unmute and answer my question. Do you feel that 50,000 rupees, if I take it from the bank, is it considered as a cash receipt? Yeah, I will answer myself since nobody is responding. I will say, in my opinion, yes, it is also considered to be a cash receipt. Now, one may think that it is my own money which I am taking from the bank. The bank is a debtor, I am a creditor, or I am a creditor and I am a debtor and a bank is a creditor. So bank is different from me. So therefore, this particular context does not consider bank and me as one person. So therefore, contra entries will also have to be looked into for the purpose of cash receipts and cash payment. Bank to bank transfer will also be considered as a cash receipt and cash payment. Whether journal entries have to be considered, the answer is no. Journal entries does not involve any cash. Now, one point to be noted is tax audit case of last year may not be subject to tax audit this year. Now, we talked about this 4 crores case. Ravi Kishore Garu, I would prefer you to switch on your audio always so that I am able to see you.
Yes, sir. Yes, sir. Yes, sir. We are there.
Yeah. So I just asked you a question whether contra entries also are considered as receipts. Let us say I have taken money from State Bank of my own money from State Bank of India, whether it is considered as receipts in cash.
Sir, as far as the turnover and expenditure is concerned, or receipts from debtors or payments to creditors can be considered for the purpose of this cash hold trust limit. But in my view, this bank withdrawal and deposit of cash, because if you are collecting in cash only, you will be able to, you are going to deposit in the bank.
While I fully, what you have collected, let us say 2 lakhs cash collection, go and deposit it into the bank. Or you have the option of spending it in cash. You have the option of spending it in cash. In both the contexts, I would say 2 lakhs cash sale is considered as receipt, and 2 lakhs cash payment is a payment, and 2 lakhs deposit into the bank is also a cash payment according to me. Because he has not used the word cash expenditure. He has used cash payment. You have paid the cash to the bank. And let us be very clear, in 269 ST, if I have drawn 3 lakhs from the bank, 3 lakhs from my own bank, if I have drawn, is it considered as a contravention of 269 ST, sir?
No, because there is a specific exception.
There is a specific circular which came out on 3rd of July 2017 to say that it is not covered. So until such an exceptional circular comes, I would say that cash payments or cash deposits into the bank is also considered as cash receipts and cash payments. That's my argument.
Sir, in my view, payments and receipts of revenue nature only may come.
No, sir. No, sir. No, sir. Sir, they have not used. Please let us be very clear. That's why I wanted to show this. Aggregate of all amounts received, including amount received from sales, turnover or gross receipts during the year, and aggregate of all payments made, including amounts incurred for expenditure in cash. This is what is told in the Act. If you go to the income tax return, in the income tax return, they have elaborated it further. If the answer, then they said amount received from sales, turnover or gross receipts or capital account like capital contribution, loans, etc. And here they have also used, they have not including the amount received from sales, all types of receipts. It is not only P&L account receipts, it goes to balance sheet receipts also. So one has to look into the receipts and payments.
In verbatim, that 5 crore turnover is a no turnover at all, and nobody can claim that turnover. 5 crore turnover.
No, sir, Chairman, sir, there are companies.
Yes, sir, no. For the purpose of turnover, it is 5 crores. For the purpose of 5%, you have to look into this. Yeah, you are saying something?
Yeah. What I mean to say, there are companies or firms who have zero cash receipt and zero cash payment, sir. There are.
For them, it is advantageous.
Yes, sir.
For them, it is advantageous, but true that for them also it is a disadvantage. I will come to that. Now, next you come to this tax audit case of last year may not be subject to tax audit this year. So be careful. The due dates could change. The due dates could change if it were to be an individual who is doing a turnover of, let us say, 4.8 crores. Less than 5%, his due date for filing income tax return will be 31st of December and not 31st of January.
Sir, one more interesting observation from Mr. Venkatramana. What he says is, in his opinion, receipt and payment should be with a third party.
They have not used that, sir. Sir, let me tell you. Is not the bank the third party?
No. What he meant to say is the third party. The account is maintained by a third party, but the bank account is that of the SSE.
Sir, let me put it like this. Let us say I have given 1 lakh rupees to Ravi Kishore by check. I said, please keep it. I'm going. I keep it. This is also my money with you, and my money of 1 lakh with the bank is also my money with the bank. What is the difference between bank and Ravi Kishore? Both are the same. Unless they use the word bank, unless they use the exception for bank, in my opinion, that cannot be the argument.
Right. No, the only intention of interrupting you is I want to include, as your wish, I want to include the participants also.
Sure, sir. No, I wanted that. Instead of it being a monologue. Let us understand each other better. as and when we go rather than at the end. That's the point I am saying. So then the second point to be noted is, if a person has claimed the benefit of no tax audit, he will lose the benefit of 80JJAA. Be very careful. Now you're talking about your client, right? In our client, we wanted to, he was claiming 80JJAA, he will be losing because he is not subject to tax audit. Now therefore, can I do tax audit for him and claim it? The answer is no. If you don't have to do tax audit, even if you do tax audit, he will not be eligible to come under 80JJAA. So that will be the answer that will come out. So we have to be very careful. In that context, maybe I will draw some cash from the bank and show that more than 5% is done in cash flow, and then do the tax audit. Then applicability of TDS. For TDS for individuals with respect to contract will also be an issue, because the moment you are coming out of tax audit, you will have to subject yourself for TDS. So ironically, there could be a situation which I will skip at this point in time. Yeah, this is one slide which I wanted to show today, and tomorrow in Hyderabad, I am talking only about this in a very detailed manner. Presumptive taxes, the difference between 44AD and 44ADA. And in the process, I have also brought in 44AE in the extreme end. 44AD is applicable only for eligible business. Eligible business could be anybody except 44AE cases, that is goods carriage people, and a person having 44ADA income, that is specified professional income, agency business, commission business, and brokerage business. So otherwise, everybody is covered under eligible business. Whereas under 44ADA, who can come out is only specified professionals. Specified professionals, one has to check up whether it is business, a doctor, engineer, architect, those are the specified professionals. Now 44AE covers only those who are applying, hiring, or leasing goods carriage. The next we'll have to understand 44AD is turnover or gross receipt up to 2 crores. So here for 44AD, up to 2 crores one can go. For 44AD, he can go up to a gross receipt of 50 lakhs only. Up to 50 lakhs only. Now, if you are owning goods carriage, then it should be less than 10 goods carriage at any time during the previous year, irrespective of the turnover. Another point to be noted is, includes a vehicle taken on hire purchase or installment for which amount is due, and eventually ownership will come to me. I am owning the asset, but it will be transferred to me after I pay the entire amount. Then it is okay. But this scheme will not be applicable if trucks are operated on hire without owning it. I am operating as a goods carriage, less than 10 trucks, but I am not owning it. I take it from somebody and I am hiring it out. Then in that context, 44AE is not applicable. For him, 44AD will come into picture. If he's just doing trucks, he's taking and giving it on, sending it as a commission agent. So for him also, if he's doing it on commission, he will not get that also. That is also point to be noted. So for 44AD, minimum presumptive profit is 8%. Whereas for 44ADA, minimum presumptive profit is 50%. Now the next thing is 8% can become 6% in the case of AD. In the case of AD, it can become 6% if the payment is received in permitted modes. Whereas in ADA, no such reduction is done even if it is received in permitted modes. For AE, we have already discussed. For heavy vehicles, more than 12 metric tons, 1,000 rupees per month per metric ton. Light vehicles, it will be 7,500 rupees per month per vehicle. Now in AD, one of the things to be noted is it is available only to eligible assessee being a resident. It is not available to non-resident. Being an individual, HUF, partnership firm excluding LLP. Whereas ADA is available to any resident assessee. The only point to be noted is even for LLP, ADA can be claimed. Now in the case of AE, any assessee can claim. For AE, the better part is even a non-resident can come under AE. Now the next point, I think the first question which was asked in this session is option to choose 44AD. That means I may or may not come under 44AD, which we have already seen. But ADA, there is no option. If his turnover is less than 50 lakhs as a specified professional, he shall show 50% profit. Otherwise, he shall subject himself to tax audit. Similar is the situation with 44AE. He has to show this presumptive profit, otherwise subject himself to tax audit. Now in 44AD, if he chooses is fine. If he chooses to take 44AD, it is fine. Otherwise, if he does not opt, he must comply with 44AA to 43C. 44AA to 43C. And once he opts for 44AD, he must declare presumptive profit for the next 5 years. Else, for the next 5 years, maintain books and get it audited under section 44AB. Whereas it comes under AD, must show profit at 50%, else maintain books and get it audited. And that's question of once you opt 44AD, there is no question of opting 44ADA. Therefore, if you want, in 1 year you can show 50%, in the next year you can get it audited, in the third year you can show 50%, fourth year you can get it audited. So that toggling between the audit and presumptive profit is possible in ADA, but in AD, once you choose 8% or 6%, you shall continue with 8% or 6%. Otherwise, you shall get it audited for next 5 years. So that is the drawback of choosing 44AD. Now, a couple of points to be noted here, or before I get into the issues, let me complete the similarities in 44AD, ADA, and also in 44AE with the exceptions marked as hash. Provisions of section 28 to 43C is not applicable. In all the cases, 28 to 43C is not applicable. All deductions under 30 to 38, including depreciation, deemed to be allowed. Return on value of asset used in business or profession computed as if depreciation was allowed. Presumptive profit is after charging partners remuneration and interest on capital. You cannot have let us say my turnover is 1 crore, 8%, 8 lakhs, I will show 8 lakhs, then I will claim partners remuneration and interest, not possible. This 8 lakhs is after claiming interest and partners remuneration, excepting for 44AE cases. For 44AE cases, after showing this 7,500 rupees or 1,000 rupees per truck per month per ton, you can claim interest and remuneration. Then point number 5, in respect of that business or profession, assessee is not required to maintain books of accounts and also not required to get books audited under 44AB. And the final advantage or the common ground between AD and ADA is advance tax at 100% by 15th March. You don't have to pay that 15%, 45%, 75%. You can pay 100% by 15th of March. This benefit is not available to 44AE cases. Ravi Kishore Garu, how's the slide? This is a one slide which we try to encapsulate the entire basis of presumptive profit.
Yes, sir. Yes, sir. All the information is available.
The entire act dealing with so many words captured into one slide. So that is this is done specifically for today's program and tomorrow's program. But now we'll bring out certain issues here.
We have some 2 or 3 queries. Can we finish off that?
Yeah, please. Yeah, please.
A person owning 10 goods carriage and 1 machinery like earth mover, can he claim 44AE?
I think for 44AE, he can come under that presumptive taxes. Earth mover is also goods carriage. I mean, that is a technical point that one has to note. Whether earth mover is also a goods carriage. In my opinion, it may not be.
Yes, sir. It's not a goods carriage, sir.
It's only earth mover. I mean, it's only the JCB and things like that, which only does like that. But what they have told is use for all these particular purposes, you have to study the Motor Vehicle Act. And under the Motor Vehicle Act, if it is considered as goods carriage, then you will be standing out. Otherwise, if you are owning less than 10 trucks, you can opt under 44AE for that. And for that goods carriage, you can come under 44AD.
Yeah. Vikramji is asking that whether it is required to get audited even if I declare more than 8% in the subsequent year after opting 44AD.
Very important, sir. That is the question which he asked. The point is once he comes under 44AD, if he has for every year, if he is showing 8% or 6%, no problem. In 1 year, he breaks and gets it audited. Then next 5 years, even if he shows more than 8% or 6%, he has to get his books of accounts audited. So that is the disincentive for him to not break. That is when he has to pay a price for breaking the rule, I would say. Paying the price of audit fee. I mean, that's the point.
Yeah. Next question is, if receipts in prescribed mode can the PP at 40% under 44 ADA? Please enumerate.
If the receipt is 40 lakhs, what did he say?
If the receipt in the prescribed, if all the receipts are in prescribed mode,
Yes.
then the presumptive taxation profit be at 40%. No, for 44 ADA, there is no chance of.
No, that's what I said. That's what I said. So that reduction is not available for 44 ADA cases. The reduction of 8% to 6% is available only for business cases. So let us say I have got 80 lakhs turnover. 50 lakhs I have received in permitted modes and 30 lakhs in cash. So for 30 lakhs at 8% and for 50 lakhs at 6% will be the presumptive profit.
And never ending question, sir. While calculating the turnover, should the taxes be included?
That's a very, very good question. I always like this particular question. And it has got two answers, yes and no. But I would prefer to say no as an answer to that. Because of taking so many citations, see why I'm saying yes, it should be included is if you read section 145A, 145A says turnover should always include all taxes. So therefore, turnover has been defined to include taxes. So therefore, it should include taxes, one view. The other view and the more popular view, the view that we are using in our office also, is to exclude taxes and calculate it for the reason that there cannot be a profit on tax. Now, the simple reason is there cannot be 8% profit on, let us say, my turnover is 95 lakhs or 80 lakhs. And with the GST, it comes to 88 lakhs. 88 lakhs. So should 8% be on 88 lakhs or on 80 lakhs? So I would always say definitely it should be on 80 lakhs. The next question that comes out is, if I were to be a company, if I were to be a private limited company, my turnover is 90 lakhs without taxes. And with the taxes, it becomes 105 lakhs. It becomes 105 lakhs. So the question is, should I get himself tax audited? Because he cannot come under presumptive taxes. So his turnover is more than 1 crore. Should I therefore subject him to tax audit? Because his turnover is more than 1 crore. There our guidance note, Institute's guidance note on tax audit says, for the purpose of determining turnover, you look into the books of accounts. If consistently the books of accounts are including taxes, your books of accounts are including taxes, then the turnover will be inclusive of taxes. If in your books of accounts turnover is excluding taxes, then for the purpose of determining the tax audit limit, you can exclude the taxes. Although it goes beyond 145A, we will take the guidance note for our guidance and not do the tax audit. And tomorrow, if the department levies 271B for such a case, I would say my guidance note says otherwise. So therefore, we have not subjected him to tax audit.
And also the return form, in the return form also turnover is to be disclosed before taxes. Taxes are to be disclosed separately.
Separately.
Loss account of the return form.
Perfect.
The next question is, a person is having 9 trucks in Sikkim where he is exempted, and 9 trucks in Bengal, which is taxable. Whether he is eligible for 44A. This income from Sikkim of Sikkimis is exempt. So he is referring to that, I think, sir.
I think this is a CA question paper. No, from a student, I'm sure. No, I'm sure that it is coming. I mean, in my opinion, because it doesn't use the word Sikkim or otherwise, it says not owned more than 10 trucks in any time, anywhere. Also should be a extended answer, logic. So I would say he should lose the benefit of 44 AE.
Right. The next question is, Railway Department deduct TDS on gross value, that is inclusive of GST.
Yeah.
In that case, how can I show the turnover in ITR? 26 days shows gross values, books show net values. Received, he has also received a notice for mismatch of turnover.
No. See, let him receive a notice for mismatch. He only has to reconcile and give it to the department.
Yes.
Get a lot of notices. Notices by itself is not a order. Notices are only a show cause notice. So we will have to give a cause as to why there is a difference between the two. And if you are able to justify the difference, that should be fine. But in this case, we will have to educate the railway department to make the TDS net of GST. If not, write a letter to Piyush Goyal. I mean, definitely he will take it up positively.
Yeah, there is an appreciation from Suryakant with regard to this particular slide which you have.
Yeah, a lot of efforts have gone in to make a very difficult topic in a very simple manner. I mean, it takes a lot of efforts to make it simple, thanks to the appreciation. I would like to bring out one point here is, what about a professional not coming under 44 ADA? Let us say a carpenter or interior designer is covered under 44 ADA. A priest, a school teacher, are they businessmen or professional?
44 AD will strike them, sir.
So the point I'm saying is, if we have talked about business and profession as a head, business will come under 44 AD, specified professional will come under ADA. What about other professionals? Because 44 AD uses the word eligible business. So does he, where does the professional, other professional come? In simple words, we can say other professional does not come under presumptive at all. That is one way to say. Other professional does not come under presumptive. So they have to maintain books of accounts, and if their turnover is more than 50 lakhs, they have to get themselves audited. Otherwise, nothing will come into picture. But the other possibility is, if you read 44 AD, it says who are all eligible business. He says he excludes specified professionals. The moment he excludes the specified professionals, that means other professionals are included. So that is an argument which we were taking, and we are bringing the other professionals under 44 AD. But a point to be noted is, for let us say a school tuition, I'm giving tuitions, and my turnover for the purpose of 44 AD, whether it will be 2 crores or 50 lakhs, I mean, to come under 44 AD.
2 crores, sir.
There I differ. I will say 50 lakhs. Why I am saying that is, if you come here, B says carrying on profession shall, if his gross receipt is more than 50 lakhs, he does not use for the purpose of B specified professionals. That means for business it is 1 crore, for professionals it is 50 lakhs. For all businesses it is 2 crores. So once I categorize him as a professional, then it has to be 50 lakhs and not. That is the point I was trying to say here in the second bit there. When I just moved the cursor here, for other professionals, for turnover or gross receipt up to 2 crores, for other professionals up to rupees 50 lakhs only.
So the same chartered accountant also giving lectures or coaching
Yeah.
students, then he will not be eligible for 44 AD, sir, because he being a professional, he is not eligible for 44 AD. In that case, what they have to do is the coaching has to be segregated to another firm or a private limited company. They have to do that.
Tax planning. Now I will give a small different thing. If a doctor is doing his profession and in his clinic is also doing pharmacy business. Let me tell you, his doctor professional receipt is, let us say, 20 lakhs and his pharmacy business is 15 lakhs. Now the question that we ask is, can he for 20 lakhs come under 44 ADA, and for 15 lakhs can he come under 44 AD?
No.
What is the reason? Why no?
Because a doctor is also a specified professional. Once he is a specified professional, he will not be an eligible SSC for 44 AD.
Perfect. So that is why if you look at my slide at the beginning, here I said except 44 AE and any person having 44 ADA income. That doctor is, the moment the doctor has 44 ADA income, he cannot come under 44 AD. In case he comes there, he will be probably for 20 lakhs 50% and 15 lakhs 8%, he will probably be lured to show my professional income is only 3 lakhs and majority is my pharmacy income. Because he would like to show more under 8% and less under 50%. So once I am as a person, a specified professional, I cannot come under 44 AD at all. So that's a point to be noted. Shall we proceed further, sir?
Yes, sir. And one more question, for other professional, will the profit limit be 8%? Is one of the queries.
Yes, for other, let me also tell you one thing, sir. Look at his actual profit. We have to see one point here. Okay, I think, yeah, 44 AD. Let me take you to 44 AD. A sum of 8% of the total turnover, or as the case may be, some higher claim to have been earned by the eligible assessee. Now, a person who is showing let us say his turnover is 80 lakhs, and he has shown 8% profit, which is whatever 6,40,000. But if you draw up a financial statement, he has actually repaid 20 lakhs loan. He has bought 10 lakhs worth of jewelry. So his actual profit is 30 lakhs for the year. But he has shown only 6 lakhs and 40,000 rupees in income tax return, thinking that 8% is what is 44 AD. The answer is not 8%, minimum 8%. That is why even in this I have used the word minimum presumptive profit is 8%, or actuals, whichever is higher. Whichever is higher. In case his actual turnover, actual profit is 30 lakhs, but he goes on to show 8 lakhs, the difference of 30 minus 8 or whatever he has shown, let us say 22 lakhs, if the department comes to know, he will be subject to tax under 115 BBE at 78% tax rate. So that is a very important point to be noted. So if somebody comes to us, we have to tell them that 8% minimum or actual, whichever is higher. Okay, sir. So next, presumptive tax. Any more questions, sir?
Yes, sir. Yes, sir. Shall we take up 3 questions are there?
Yeah.
A private limited company into the business of software support has turnover of 80 lakhs with the TDS under 194J, showing profit less than 50%. Whether section 44AB is applicable for company?
Yeah. The point is, when do you call it as a business and when do you call it as a profession? Now, when do you call it? What is the criteria? Although the word business and profession has been defined in Income Tax Act, we are coming that whatever is a profession is wherever you use your Uttar Pradesh, wherever you use your brain and a qualification, then it is profession. And that is restricted to an individual or a partnership firm, including an LLP. It cannot be extended to a company. A company cannot be said to be in the line of profession. I mean, even if it is all doctors coming together and forming a private limited company, even that we don't call it as a profession. We call it that as a business only. So in this case, it will be a business.
Whether and it is since 1 crore has not exceeded, I think 44AB is not applicable.
Yeah, definitely it is a company. So therefore, he cannot come under 44AD also. Yes.
Right. Whether 44ADA covers only individual professionals, and this is a repeat of question which has been already answered.
Yeah.
And kindly share PPT for our reference, please. It is up to the faculty to decide whether he is sharing or not.
Yeah.
If SAR shares, we will definitely share it. No issue.
So 44AD, presumptive basis for business. I think we have already seen this. Eligible SSE, eligible business, 6%. Why I took up this is, if you look at this, 6% for receipts through account paid check, account paid draft, or by use of electronic clearing system through a bank account, or through such other electronic modes as may be prescribed. So we are coming to a very important aspect. What are those? I said 3 plus 8. So on 29th of January 2020, they came out with a circular having a retrospective effect from 1st of September 2019 to say, along with the 3 modes, 8 other modes are considered to be permitted modes. What are those 8 modes? Credit card, debit card, net banking, IMPS, UPI, RTGS, NEFT, and BEAM. So these are the 8 other permitted modes, along with the account paid check, account paid draft, and electronic clearing system through a bank. Now, for what all purposes and how did they introduce this? They introduced a new rule called we are all familiar with Rule 8D, Rule 6GD. They introduced a new rule called Rule 6ABBA. I mean, Ravi Kushar Garu, I think our generation, Abba and Bonium, they were 2 very popular English bands. So like I call it as 6 Abba. So Abba is a popular English band. So 6ABBA has been inserted to say the following 8 are considered to be permitted modes of payment for not only section 44AD, but also for so many other sections. 13A, dealing with contributions received by a political party, more than 2,000 rupees. If the political party receives in other than permitted modes, it is considered as not exempt. 35 AD, 35 AD, we have already seen specified business, that is cold storage, two-star hotels and above, 100 bedded hospitals and above. 100% of your capital expenditure spent in permitted modes will be allowed as a deduction in year 1. Section 40A, Section 40A3, specifically 40A3, more than 10,000 rupees per person per day. If you are paying in 3 plus 8 mode, it is allowed. Otherwise, it will not be allowed. Section 43. Section 43 is linked to 40A. Section 40A is only an expenditure, debit, P&L account, debit side we used to cover. What about if I buy a computer by paying cash of 50,000 rupees? Will it be allowed for depreciation purpose? Because anyway, 50,000 rupees will not be allowed in year 1. 50,000 rupees is for depreciation purpose. Section 43, which defines the cost which for the purpose of depreciation, says if an amount is spent in cash or other than in permitted modes, that 50,000 rupees what you spent in cash will not enter the block of assets for the sake of future depreciation and for the sake of eventual calculation of your WDV while you calculate your capital gains. 43CA. 43CA has to be read in terms of 50C. What is 50C? 50C is if I am selling an immovable property being a capital asset, I have to minimum, the sale price should be the guidance value. If I sell 1 crore worth of property at 70 lakhs to Mr. Ravi Kishore, then although my sale deed shows 70 lakhs, my sub-registrar value, if it is 1 crore, for the purpose of 50C, I will have to take my sale value as 1 crore and not 70 lakhs. Now, for 43CA comes into picture when I am not dealing. I used to say 50C is applicable only in the case of capital asset. What if I am a businessman selling immobile properties? It is 50C is not applicable. Section 43CA comes into picture. So what is 43CA? If I am selling immobile properties as a businessman, if I am selling a flat, if I am constructing and selling flat worth 1 crore, I am registering it to Mr. Ravi Kishore at 70 lakhs. Then although the sale value is 70 lakhs, the guidance value is 1 crore, I have to say in my credit to my profit and loss account will be 1 crore. Now what is the reverse of this? For Mr. Ravi Kishore, he is getting 1 crore worth of property at 70 lakhs. Now under section 56(2)(10), Mr. Ravi Kishore will have to pay tax on 30 lakhs under income from other sources because he is getting 1 crore worth of property at 70 lakhs. Now, what is the connection between that and permitted modes? What they said is, if I am selling 1 crore worth of property at 70 lakhs today, but 3 years ago, we have entered into an agreement. 3 years ago when the property value was 70 lakhs. When the property value is 70 lakhs and Mr. Ravi Kishore has paid me any advance in any one of these 3 plus 8 permitted modes, then the sub-register value as on the date in which the agreement is entered into, on which the payment was exchanged, any part payment was exchanged, will be the basis. This is true for 50C, 43CA and 56(2)(10) also. 44 AD just now we saw. Permitted modes, I will have to pay taxes at a reduced rate on the permitted receipts. 80JJAA we have seen. 269SS and 269T popularly. We have taken a loan, 269SS. It has to be in permitted modes only, more than 20,000 rupees. Not only loans, deposits, or you know what is the full form of SS, Ravi Kishore Garu? 269 SS mein, you know what is the full form of SS? Specified sums.
Specified sums.
If you look into the specified sums, what is the definition of specified sum in the Income Tax Act in 269 SS? They have defined a specified sum to mean any amount collected towards advance or otherwise in relation to an immovable property. If it is more than 20,000 rupees, if I am selling an immovable property and collecting more than 20,000 rupees, it has to be by virtue of permitted modes. If I collect it in cash or other than permitted modes, then that will be penalized at 100%. 100% penalty. So 269 SS, 269T, when I return the loan, I will have to pay it in, give it in permitted modes only. 269 ST, any receipts towards PTE, per person per day, per transaction or per event or occasion of more than 2 lakhs should be in permitted modes. If it is more than 2 lakh rupees. Otherwise, there is a penalty of 100%. So that is the change that has happened. So what is the change? They have introduced 8 other modes of payment. Now the question is, they have introduced, let us say, net banking, RTGS. From 1st of September 2019, these have been introduced. Sir, let me tell you, in April, Mr. Ravi Kishore has taken a loan of 2 lakh rupees through, let us say I have given Mr. Ravi Kishore 2 lakh rupees loan in the month of April 2019. Will it be, and there I have not given an account pay check, not in account pay draft, not through electronic clearing system through a bank. See, this RTGS NEFT is not considered as electronic clearing system through a bank. ECS, what we talk about ECS is for payment of electricity bill, water bill, that is ECS, or club bills, etc. is ECS. RTGS NEFT is all electronic banking, that they are not ECS. Now in April, if I have paid, will it not be, because they said that they have introduced this with the effect from 1st of September 2019. What will happen for those loans which I have given in the month of April? The answer has come out from our guidance note. Our institute says any payment done through a banking channel by an electronic mode will always need not be reported for 269SS and 269T because trail is available to that extent. Although they have introduced in the act now, our institute had told in the guidance note long back about this particular situation. So once on this 1st September, when they introduced 6 ABBA, they amended Rule 6DD. What is this Rule 6DD? 6DD tells me exceptions for 40A3 only for 40A3. This exception is not available to 43 or any other type of payments, only to 40A3 type of payments. They have said Rule 6DD amended to include reference of Rule 6 ABBA for prescribed modes of payment. So they have brought in that. Then they removed use of electronic clearing system through a bank, credit card, debit card here, because anyway it is covered under 6 ABBA. And they have also made one very interesting deletion in item number J. Payment made when banks were closed due to a holiday or strike has been struck off from Rule 6DD now. When earlier, if some payment of, let us say, 5 lakh rupees was done, very ingeniously, some of us used to say, you debit it on Sunday or a bank holiday and claim it as an expenditure. I will not show it as a disallowance under 40A3. Now they have struck it off because they have given more types of payments. Even on Sundays, I can pay it on any one of these days, and he can go it in an ATM and draw it out. So that is how they have struck off this from the Rule 6DD. So now we quickly finish off in the next 15 minutes the other changes. Income tax due dates. I don't want to take any questions now. I will just finish off my presentation and then the last 10 minutes we will take off the questions. Income tax due dates, all of us are aware, has got extended. I will not spend much time. But a point to be noted is, even if you have time now, if the tax payment is more than 1 lakh, 234A interest will have to be paid. And we have already seen that the benefit of claiming 80C, 80G or all Part B deduction under Chapter 6A up to 31st of July, one can claim the benefit. Even for financial year 1920. But as a tax auditor, I have to be very careful. If I have given that benefit this year for last year, I should not claim that benefit for this year again. So say, let us say 80G donation of 2 lakhs I have given. I cannot claim it in 1920 and 2021. So I will have to choose between one of these 2 years what for payments done between April to July. So that's a point to be noted. Now quickly, other changes done in Finance Act 2019. Relaxing provisions for payments to non-resident without TDS. If some payment is done without TDS, there are two problems. One problem is the expenditure will be disallowed under 40A1A. It will be disallowed under 40A1A, and the TDS wing will say that I am considered as an assessee in default, and they can always recover the TDS subsequently. However, if I want to come out of this, there is one relaxing provision in proviso to section 201. They say that if the person on whom I was supposed to make TDS, he has shown that income in his return, he has paid the taxes, he has filed his income tax return, and he gives a CA certificate in form 26A to say that all these compliances have happened, then I will not be considered as an assessee in default from the time he files his income tax return. Till such time I will have to pay interest under 201(1)(a), and I will not be subject to 40A(1)(a) disallowance. The moment he gives me his income tax returns, I can claim this as an expenditure. This was there already for last year. What got changed is this payment only if it is done to a resident was there. Now even for a non-resident, this can be claimed. This benefit of relaxing provision can be claimed. So 92C, Indian entity suffering primary adjustment, option to pay one-time tax of 18% plus surcharge of 12%. I mean, mostly I don't know in Vijayawada how many transfer pricing cases are there. But the point is, there is something called primary adjustment and secondary adjustment. Primary adjustment means whatever is not done at arm's length should be added only in the statement of total income. Don't have to get it in the books of accounts. But if the amount which is added in the statement of total income is more than 1 crore, then there is something called a secondary adjustment which came in 3 years back. They said that you will have to get in the amount, or if you don't get that amount, on that you will have to consider it as a loan given to the other entity and charge interest. That is called a secondary adjustment. So what change that came in, because we have to comment this in our tax audit report, what change they have introduced in the Finance Act number 2 2019 is to say that instead of the secondary adjustment, whatever primary adjustment you pay taxes, and whatever secondary adjustment, in lieu of the secondary adjustment, you pay 18% tax on the primary adjustment and you don't have to do the secondary adjustment. Point number 9, 56(2)(10. We are very popular 56(2)(10) gifts or any amount received from a non-relative of more than 50,000 rupees per person. I mean, I received from any number of persons more than 50,000 rupees in cash, property or immovable property for inadequate consideration or no consideration is anyway taxed in the hands of me. Now this was not applicable to non-resident. Now it is made applicable to non-residents also. So 50CA and 56(2)(10 has a very interesting relationship. 50C is popularly for immovable properties. When I sell immovable properties, I am under an obligation to show the sub-registrar value as the minimum value or the transaction value, whichever is higher. Similar such requirement is there when I sell shares of closely held companies. When I'm selling shares of closely held companies, I will have to calculate the fair market value of the shares. And if I am selling it for less than the fair market value, I will have to consider the fair market value as the minimum value or actual, whichever is higher. That is 50CA. 56(2)(10 is the reverse of it. For the person who is receiving it also has to pay. What they have done is they have set prescription of exemption from deeming fair market value of shares for certain classes of persons subject to certain conditions. So CVDT can prescribe what are all the cases under which 50CA and 56(2)(10 need not apply. For the moment, they have prescribed only one, that is Delhi Development Authority flats which are sold through shares. You don't have to consider that for 50CA purpose. The extension of section 43B disallowance to include interest not paid to specified NBFC. Earlier, only banks and financial institutions were covered when you are not paying interest to banks and financial institutions. Now, even NBFC interest, if you have not paid, you cannot claim it as a deduction unless you have paid the amount within the due date of filing the income tax return. So these are all the other cases. Yeah, the other minor changes which have happened through the interim budget presented by Piyush Goyal was threshold limit for TDS under 194A has got increased from 10,000 to 40,000 rupees per annum, and from 194I TDS increased for rentals from 1,80,000 to 2,40,000 rupees during the year. 80IBA, those of you who are claiming the infrastructure benefits, the extension of time for such companies up to 31st of March 2020, and in the ordinance they have extended it to 2021 also. So TDS chart nothing big. But TCS has been introduced from 1st of October, so therefore it is not going to cover for last year. I'm skipping that. Whether the assessee is required to deduct or collect tax as per the provisions of Chapter 17B and 17BB, I will skip this. I mean, it is there, not big, much of a change. Yeah, measures to boost the economy. This is what I would like to spend some time. Additional 15% depreciation on motor vehicle acquired on or after 23rd of August to 31st of March 2020. If I have acquired any vehicle, earlier rate of depreciation was 15%. Now the revised rate of depreciation is 30%. So I have bought a Benz car between these two dates. So my depreciation is 30% because I bought it in February 2020. So motor buses, lorries and taxis used for hire was originally 30%. If you bought it between these two dates, it will be 45%. So that is very clear. A couple of issues here. One is, what if those cars were to be second-hand cars? Between these two dates, I have bought a second-hand car. Will I be eligible for 30% or 45%? The answer is it will be eligible for higher rate because they have not told new cars. So any car purchased, including a second-hand or a third-hand, will be eligible for higher rate of depreciation. Now, this is given to boost the automobile sector. Now, once I say that I had to sell my old car, then only I could buy my new car. So if I was not in a position to sell my old car, then I would not be in a position to buy the new car. So the other person, unless he's gotten the benefit, I will not get the benefit. So that is a logic I would put it. So anyway, they have not used the word new, so therefore you will be eligible. Point number 2 is next year, will it go back? I have bought this Benz car and 30%. Next year, will it go back to 15% or it will continue at 30%? The answer is this 30% is a new block. Whatever you started with 30% will continue at 30% till that block ceases. So that is a point to be noted. So this 45% is the only rate which is more than 40% in the Appendix 1 when you open it up today. So this will also be restricted to 40% if you are coming under 115 BAA or BAB. Otherwise, you are eligible for 45%. Changes in 26 AS, Form 60, 61, no big change, but then point to be noted. So tax audit is all about taxation and audit. I mean, the chairman of Hyderabad branch is Pankaj Trivedi. When I was presenting a similar topic there, I said, Trivedi Garu, you know what is the meaning of Trivedi? Trivedi means one who is an expert in 3 Vedas. At least 3 Vedas. There are 4 Vedas. And one who is an expert in 3 Vedas is called a Trivedi. If he is an expert in 2 Vedas, he is called a Dvivedi. If he is an expert in 4 Vedas, he is called a Chaturvedi. So for us, I don't know whether we can be experts in 3 Vedas or 2 Vedas also. But then for us, all of us have to be Trivedis. For us, the 3 Vedas are Income Tax Act, Standards on Audit, and Guidance Note on Tax Audit. If you have to do the tax audit, you will have to be at least Trivedis, and these are the 3 Vedas. And I would not stop there. In fact, we have to be not Trivedis, but we have to be Chaturvedis. The 4th Veda is actually the Code of Ethics. So for us, if we have to do tax audit, we have to be Chaturvedis. So the 3 Income Tax Act, Standards on Auditing, Guidance Note, and Code of Ethics has to be mastered. Otherwise, we may end up being subject to Tax Audit Quality Review Board and paying penalties under 271J and bringing a bad name to the profession. So this is where the Prime Minister went on to say the signature of the Chartered Accountant is more important than the signature of the Prime Minister. While he was trying to compliment, most of us thought it was a compliment. Actually, he was complaining, saying that please use your signatures very carefully because you are more powerful than me. So should we CS be happy about it? Yes, we should be happy about it if we are able to do the duty properly. So please do our duty properly. Thank you so much. It's about 2 minutes to 8. I can take a couple of questions before I say goodbye to all.
Yeah, sir, one question is with regard to whether grandmother gifting a property to granddaughter, will it be covered under lineal ascendant and will it be exempt?
Yeah, again, this is a question from the CA question paper, I would say. See, lineal ascendant, lineal descendant. I never knew that my grandmother, See, the point that they're trying to say is paternal grandmother and maternal grandparents, maternal and paternal. So whereas my father and mother is my relative, because income tax, I mean, I would like to make a distinction between the relatives. Relatives in Companies Act versus Income Tax Act. Relatives for Accounting Standard 18. Relatives for Accounting Standard 18 is very simple, sir. Aju baju, aage piche, upar niche. Aju baju is husband and wife. Aage piche is brother and sister. Upar niche means mother, father, son and daughter. That is the relatives for Accounting Standard 18. If you go to Companies Act, they have defined relatives with a small twist with Accounting Standard 18. Aju baju, aage piche, upar niche. Then they have brought in son's wife and daughter's husband. They brought in son's wife, that is daughter-in-law. Ask daughter in which law? Ravi Kishore Garu, daughter in which law? Daughter in company law. Because daughter is a relative by blood and daughter in company law. And daughter's husband is son in company law. So daughter-in-law and daughter-in-law and son-in-law are also relatives for Companies Act. Very interestingly, for Companies Act, grandfather and grandmother and grandchildren are not relatives. If my grandfather owns the shares in Reliance Industries Limited, I can be the auditor for Reliance Industries Limited, no problem, because my grandfather is not a relative for income tax purpose, for Companies Act purpose. Now let me now come to income tax. In income tax, they have defined relatives in 3 places. They have defined relatives in 3 places. One for the purpose of 40A3. And normal relatives in section 2, they have defined relatives as aju baju, aage piche, upar niche. But the difference between Accounting Standard upar niche and the Companies Act income tax upar niche is, here upar niche means it goes beyond. In Accounting Standard and Companies Act, we say just upar, just niche. Just upar, just niche. In income tax, we say upar means all upars. That is lineally ascendant and lineally descendant. Lineally ascendant and lineally descendant. Then relatives have also been defined for 56.2.10 in section 56.2.7. In 56.2.7. That is an extended definition. Aju baju, aage piche, upar niche, wife's parents. Then it goes on to say my brother and sister of my parents and spouses of all of them. Spouses of all of them. Brother and sister of my spouse. Brother and sister of my spouse. Brother and sister of either of my parents, and then it goes on to say the spouse of all the above. The point that is coming out is when we use the word lineal, and for a third purpose they have defined relatives, that is for section 13. In section 13 they have defined relatives in a different way. So I'm not talking about that. I wish relative itself is a 1 hour topic to discuss, but today I'm just saying lineally ascendant. Does it include only my father's father and mother, or does it include my mother's father and mother also? I am a great arguer of including everybody. Without my mother's father and father, I would not be there. When I would only argue before the court to say, sir, can you prove? Sir, Your Honor, in fact, I will tell you the mother's mother is the first person who has seen me. She will take care of my, you know what I'm saying, meaning, the daughter's mother is the one who takes care of the grandchild. She's the one who sees me first. And you say that she's not a relative. So unfortunate. In fact, where this is coming from, in November 2018, in CA Intermediate, this question was asked. In November 2018, CA IPCC, this question was asked. How it was asked is, the person is receiving a gift of 1 lakh from his mother's mother. Should it be exempt under 56.2.10? That is a question that came out. They said it will not be exempt. They taxed it, saying that mother's mother is not a relative, and they taxed it. And then they said an alternative view is possible. I said that is the only view which is possible. I mean, definitely that is wrong to say. I would say that mother's mother is also a grandmother. Yes, sir. Next question.
You can never forget the definition of relative anymore. Once if you have listened.
Yes, sir. Any more questions, sir?
Yeah, full of appreciations are there. I think we have exhausted with the questions. So I think it's time that we conclude this session. if any of the students are there in this session, of course, this is intended for students and members has also joined. One thing about Gururaj Acharya sir, what I should say, my dear student friends, right from the beginning of this session, if you have observed one thing, you always have a doubt whether you have to mention sections in your examination, or how can you remember so many section numbers and the provisions corresponding to those section numbers. The 3 hours what Gururaj Acharya sir has done is, wherever he sees a section number, the provision is not appearing on the slide, but he is reciting the provision as if he has studied yesterday or day before yesterday, or he has written it 10 times today. So is it possible to remember those many number of sections? Well, Gururaj Acharya sir has done it. Of course, how he could do it is by way of practice, practice, practice. So my dear friends, you can also do that. And it is one of my advice to the students. Go to your chairman sir for his closing remarks. Sir, please unmute and speak. Please unmute and speak.
Sir, that's really a fantastic session. A very good value addition to each and every minute of the all 180 seconds that what you have spent on the today's session, sir. Really, really great one. And total session is interactive, and each one that what we are missing in each and every point that you are adding it, sir. Really, really great. Thank you very much for making us alive in the tax audit regime. Thank you. And I agree, all the participants will agree with me in accepting the same. Thank you, sir. Thank you very much. Since it is a virtual meeting, we could not able to render our hospitality to this thing. Definitely, when you are come here, and we'll render our hospitality. You can taste our hospitality, and we can take you to the goddess Kanakadurga as always wishing by you. Really, really great, sir. Thank you, and we'll reach you as and when the time comes. And over to you, Ravi Kishore Garu.
Thank you, sir. It was an honor. Thanks for giving me the honor of being with the learned members of Vijayawada and the forthcoming learned members of Vijayawada, that is the students community. So I wish all the students very good luck for them to join our profession. And I seek the blessings of all the seniors here, especially because you are very close to Goddess Kanakadurga. Thank you so much. Krishnarpanam.
Thank you, sir.
Thank you very much, sir. Thank you all participants, members, students who have joined this session. We'll meet you tomorrow.